Yo, good morning, chart fanatic fans. My name is Kevin Dubrisky. I'm here hosting the Market AM session here with you guys, and markets have been absolutely soaring. Did you guys have the S&P hitting 8,000 on your bingo card this year? Because we're getting awfully close. We're right near 7,800. We're going to use the Market AI terminal to break it down exactly what's driving all this optimism when just a week or so ago we were looking at almost a 5% decline from all-time highs. The S&P was over 12% below its all-time highs, and all we needed was one strong catalyst, and I'm going to show you guys what that catalyst is here today with our Market AI terminal. So let's break it down. If you have any questions in the meantime or while we're going over something, please feel free, drop it in the comments. Let me know what you're trading today and how your day's looking. But if you're ready to make some money, ready to print it up, smash that like button. If you're not already, hit subscribe, and let's get the party started. So when we're looking at the S&P 500 today, we see S&P 500 futures cling to highs on a Hormuz progress, keeping oil subdued. So that's one of the main drivers of a more calm and optimistic market right now is oil prices coming lower. That's driving optimism back to the upside for stocks, for equities, also for gold as well. But what it's really helping drive is lower inflation costs, which again is a domino effect to the Fed not having to hike rates, possibly having cuts back on the table, driving more optimism. People are more hopeful. And guess what? As long as the AI trade is proving profitable and that revenue stays consistent on these big tech companies like Google, like Microsoft, like Amazon, then guess what? Big investors, big firms, they're going to keep milking that trend and they're going to keep riding it to new all-time highs. All those people complaining, there's a bubble, guess what? It's either still getting bigger and bigger, or there is no bubble. This is going to be partially the new normal. Yes, will there be pullbacks? Of course, markets don't just go straight up. But as we see, even up until now, we are still grinding higher. S&P 500 at new all-time highs. It is a midterm year, which is historically a much more bearish year for the market. And yet here we are again, guys. Smash that like button, guys. Good morning, everybody. Happy to be here. This is my second Chart Fanatics this week with you guys. I think third in total. Absolutely love hosting these streams, giving you guys some insights and breaking it down. So right off the bat, when I'm using my Market AI terminal, if you guys don't have access to it, check it out. Market Edge, MRKT, edge.ai. Use code CF for Chart Fanatics for 20% off. We see that our bias is bullish. It has a slight reversal risk, so you could hover over that and you could see what could possibly reverse price. Fresh news or an upcoming event is pushing the other way, so the bias could reverse soon. Tighten your risk. Be prepared. If we hit our icon of Y, it's going to tell you what's supporting it and what could possibly be going against that trend. So Fed officials stress inflation is still too high, but guess what? When we use a tool like MRKT and we do our analysis and it reminds us, well, don't forget oil is moving lower, then this right here that says inflation's too high, this becomes less of a worry because we know one of the core reasons inflation was so high over the past few months is primarily because of the Iran war and the escalations driving oil prices through the roof because it was a supply issue. Inflation followed through, gas prices got more expensive, all those imports, exports more expensive for companies, passing on more prices and higher prices for the consumer. That whole domino effect we're seeing. Well, guess what? Now we're starting to see that domino effect in the other direction. Again, S&P 500 flying to all-time highs. How are you guys trading this? Well, I'll tell you one thing. When we're at all-time highs, the last thing you want to do is just sell at random, right? The last thing you want to do is go on a 5-minute chart, look at it and go, oh, well, this 5-minute is rejecting right now. Look, we swept a previous high and now we're sort of rejecting. I should definitely go short. No, we need to listen to the market and what the market is telling us. We're hitting 7,800 for the first time on the S&P 500. This is massive. We want to follow the trend. The trend being our friend is not just a saying. The trend being our friend is something that we should live by as traders. And when the trend is this clear, then yeah, guess what? We're not going to try to stab at 40 different short positions just to get stopped out. In fact, we're better off letting it play out to the downside, a short-term move, and looking for that long position to, again, trade with the trend. When we hear sayings like buy the low, sell the high, we want to be buying the low when it comes to a bull trend. We do not want to be selling the highs because we don't know. We don't set where the highs are. And because price is at such a brand new level, there's no historical data to tell us this was an area of resistance at some point. We are at brand new levels. So guys, what do? When price is at brand new levels, you can't find that key level. What do? You want to use key psychological levels. That would be somewhere near 7,800 even. That's a key psychological level that, guess what? Institution, investor, opening range breakout trader, initial balance trader, order flow trader, they're watching these key psych levels because they're whole numbers and they're areas that have psychology to it. I'm sure you guys have heard before, trading is not 50-50 when it comes to strategy and psychology. It is 80-20. It is 90-10. And that 80, that 90 is not strategy. That 80%, that 90% is psychology. Psychology plays such a big role when it comes to trading. You could have a 90% win rate strategy, but if you're not letting your winner play to take profit, if you're not closing out your loser where you should be, it doesn't matter because your risk management's poor and that strategy won't work for you. So you need to find a strategy that makes sense to you, that you can trade time and time again, and that you're gaining consistency and confidence in. We had AMD and SpaceX earnings yesterday, had a nice bull run from more escalations. However, AMD and SPCX dropped about 8%. Do we reckon we might have a pullback short term? You can take a look. We'll definitely dive into some AMD. And what we can do too is we can ask, so it had a pretty decent pullback. 524 down to 473. What's cool with our MRKT terminal is we could come over to Ask Market and I could ask it, give me a breakdown of AMD's earnings and revenue and their earnings call. It's going to transcribe it for me. Give me a rundown on AMD's earnings and revenue and their earnings call. Perfect. We're going to send it out. Now, again, the great part, I posted a post about this yesterday, but the best part about Ask Market is it's not like ChatGPT or Gemini or Claude, Gemini, ChatGPT. These things, they pull information right from a search engine, right? When you pull information directly from a naked search engine like that, what happens is you get people's opinions mixed in with the facts, and that gives you inconsistent results. We do not want opinions when we're trading markets. Whether you're a long-term investor, whether you're a day trader, opinions are garbage when it comes to the markets because guess what? Everybody has an opinion. Everybody's going to think one thing or the other, and it's going to throw your bias off from not even facts, from somebody else's opinion. So let's take a look at AMD real quick. AMD delivered record Q2 revenue at $11.5 billion. Data centers up 107% year over year to $6.7 billion. Oh man, 6.7, let's get it. Now 58% of total. Okay, so their data center, wow, that's crazy. 58% of their total revenue is coming straight from their data centers, beating expectations with strong Q3 guidance. Stock was up 7%. It is down now at this point, as we saw. Take a look one more time. Yep, AMD is currently down in the pre-market. Take a look extended. Yeah, so it had that first move. That's why it recognized it as up, but I'm going to let them know because this is a freshly new tool that we just launched, that it is down now and it should be updating a bit more fluently. Though recent coverage points to a buy rumor sell news dynamic post earnings and competitive pressure from NVIDIA SpaceX exclusive deal. Gives you a rundown of the exact information, a news summary, key fundamentals to watch, $845 billion market cap. That's a good thing to point out, guys. AMD isn't even at that $1 trillion market cap. I'm sure you guys have heard of Micron, MU, that had a wild rally lately that pushed it to that $1 trillion market cap. In my opinion, and again, opinions don't matter, but looking at valuations, looking at how AI is making such a strong move, and looking at how great their margin is, how great their profit and revenue is, it should be at least $1 trillion market cap, right? So does that make us think, okay, AMD has some room to go for sure. So just something to keep an eye on there with AMD. We could also now ask about, let's see, ready? We're going to say, tell me about SpaceX's earnings that came out on 8/4. Ask more. Yeah, it is. It definitely is. How do you? No, we don't have GEX levels. GEX is a little different. So that's all like gamma exposure, options activity. What MRKT is giving you is it's giving you the fundamental approach. So what's actually moving markets on the back end, whether it's the Fed looking to hike rates going forward, if the hikes have a less of a chance of happening. It is summarizing everything news-wise that comes out overnight, so you're not guessing or Googling or throwing on CNBC for an hour just to get a whole lot of nothing, and again, a whole lot of opinions at that point. So let's see, tell me about SpaceX's earnings that came out on 8/4, and you could ask it anything. I could tell it, okay, it didn't pull that up. That's fine. We could ask it about CPI. We could ask it about NASDAQ's bias today. What's supporting NASDAQ's bias today? Right? Do we continue higher? Do we start having that sideways price action? Just by looking at the charts, right? Daily time frame wise. If you're looking at these charts, no drawings, nothing. Does this really look like a move that's just suddenly going to reverse? And we have to be able to answer that, right? We want to ask ourselves things like this. We want to find price levels, but we don't want to just do that. We want to ask, is this probable? And seeing that we had strong momentum and extreme pivot higher, this is a move that we would look at and say, no, this has momentum to the upside. More follow through, more follow through, more follow through. There's no sign of weakness. If we had a huge rejection candle here, yeah, we'd start seeing a little bit of a slowdown. But at this point, I'd ideally want to see 78.50 today would be a nice first target. 7,900 would be fantastic. 8,000 really is in the works. It's only 200 points away from the S&P 500 right now. That is insane. Guys, let me know. What do you think in the comments? Tell me in the comments right now, do you think we're going to 8,000 sometime this month on the S&P 500? We're only 200 points away. It is only the 5th of August. We have plenty of time to get it done. When we ask ourselves, is it possible? It's most certainly possible, but is it probable? And with these earnings, not AMD, not SpaceX, but Microsoft, Google, even Amazon had great earnings and great revenue from their CapEx. Now, when we talk about an AI bubble, a lot of people get confused and think, oh, well, the revenue's not real. The revenue is very real, guys. They're not... These companies aren't the government. They can't just print money out of nowhere. They can certainly sort of cycle it through with each other, where NVIDIA makes a plan with OpenAI, OpenAI makes a plan with Microsoft, Microsoft makes a plan with NVIDIA, right? But it's not out of thin air money. What's going on, guys? Marie, what's going on? MC, what's going on? Yeah, absolutely. It's all about perspective is key. Perspective is key when we're looking at the markets. Because think of it this way, guys. When we're looking at markets, I'm looking at the same market as you. You're looking at the same market as the next guy. The whole ideology behind we're trading against some of the smartest people in the world is true, and it's scary to some. But let's reverse that psychology. Instead of trading against the smartest people in the world, I want to trade with the smartest people in the world. I know that the smartest people in the world usually have a terminal like a Bloomberg terminal or something that gives them that fundamental read, a strong understanding of economic data, everything else that falls in line that supports or goes against a bias so they know how to leverage and how to risk properly. Well, guess what? Instead of spending over $30,000 a year on a Bloomberg terminal, you could buy MRKT and get access to it for a year. Annual is only $500. Monthly, $50. What more do you need? On top of that, use code CF and you get 20% off on top of that. So, fantastic tool. It is most definitely a requirement, especially now, even if we didn't get economic data as much as we did, the fact that at this point we have a president that tends to be very wordy lately, tends to be on his Twitter, on his feed, on his Truth Social, goes to a lot of Fox interviews. we want to be aware of everything that he says, because no, he doesn't move the market per se himself, but what he says will have that domino effect like we were covering earlier. If he says something about the US is going to hit Iran harder than ever tonight if we don't make a deal, and we don't make that deal, and we know that that's going to have an impact on oil because oil's inventory, 20% of it comes from Iran, guess what? We're going to see oil react to that. And guess what we're going to see after that? We're going to see inflation fears back on the table. That's where the domino effect comes in place. And we could use a tool like MRKT to be ahead, to put all those pieces together versus, oh, I just saw this headline on Twitter. Trump said this, but it was 30 minutes ago. How did markets react? I'm not too sure. What's this mean? I don't know. MRKT, check this out over here, guys. Newsfeed, breaking news. We had July ADP non-farm payrolls about 6 minutes ago, it says. I could hit this icon right here. If I don't quite understand, well, what's this headline mean? How does it impact my markets? I could hit this icon and click explain, and it's going to give you an actual breakdown of what that means. All right, so here we go. Market AI analysis. So for this, it says risk on with a mild dovish tilt. We know, and if you don't know, guys, dovish means the rate hikes are sort of falling off the table. So rate hikes, when the Fed is in a more hawkish tone, that means they're holding rates steady for longer and possibly looking to hike rates. So hawkish, hike. Whereas dovish is when they dive, right? When they go lower. So if it's more dovish, that is more bullish for the market because that brings optimism that we might look for another rate cut at some point. So this is a nice little optimistic run right there. Softer than expected private hiring reinforces the narrative of a cooling but still functioning U.S. labor market, tempering near-term Fed hike odds without screaming recession. So it's tempering the Fed hike odds, which is great, but it's not screaming recession, which is also a good sign. We do not want a headline that comes out that says, yo, red flag over here, be careful. And again, MRKT is going to tell you when that happens. So let's take a look at NASDAQ as well. We could break down any asset we want when we're looking at our MRKT terminal. Something I do want to point out to you guys, S&P 500 is at its all-time highs. I mentioned before, NASDAQ was at lows of 12% from its all-time highs. Now, when we're looking at percentages, before I was teaching you guys about key psychological levels, right? Those whole numbers that most people are looking at, especially when we're at all-time highs. Well, there's also key psychological percent pullbacks. So when we have a 5% pullback on the NASDAQ, on the S&P 500, a 5% pullback is considered pulling us into a pullback territory, 5% and over. When we hit 10%, that's where markets really enter a more bearish territory. 20% is considered crash territory. So we hit that 10%, right? We had 12% over here. That big earnings came out and boom, what did NASDAQ do? A 10% rally to the upside. I'm not too sure. In Frozen. I'm not too sure. I'll shoot it to Google, see what's going on there. All right, let's see. Or we could ask Market about it too. We could ask Market about anything. Guys, let me know, what ticker are you looking to trade today? Do you want me to cover any key levels? Give you guys some insights. Let's see what's going on NASDAQ-wise. Something I would like to keep an eye on is sort of that middle point from yesterday's move right over here, or even a pullback level, right? So as you guys see right off the bat, I have a lot of these are supply zones. These are areas where prices reacted to in the past. I like to combine my edge. When it comes to trading, there is no, here's my orb strategy. I buy the breakout or I sell the breakdown. That's it. Too simple, right? We do want to keep our trading simplified, but we want to have confluence. Confluence means multiple reasons to take the trade, multiple confirmations that are agreeing with that price level you're looking at. So when I look for price levels that markets react to multiple times, then I use my fundamental bias with MRKT. Guess what? When we were selling off over here and MRKT was telling me bearish, I was taking these short positions off of my supply zone, which is part of my edge, and they were playing off very well. I was trading with the fundamental trend. I was trading with my edge. Everything was lining up. There was our confluence, right? Now at this point, what are we seeing? We're seeing that price is completely disrespecting all of these areas of supply. So again, this tells me markets are shifting. And instead of looking to short in a supply zone, I'm going to look to see if we could scale above, take a retest, and use it as support, right? We want to adjust to different market conditions versus just hoping that market conditions are in our favor, versus just trading the same exact way every single day, because that's again why we use MRKT, because market conditions are constantly changing, because all it takes is one headline to completely shift the direction of oil, of all these commodities, of these assets. So really great, guys. Awesome. Good breakdown. Let me know, how do you see, like, the news says NQ down, but news below it says NQ high. Which headline are you referring to? Because I'm seeing, let's see over here. I didn't see any headlines about NQ being down. What we do have is so when you click your asset over here, it gives you a brief headline. So NASDAQ 100 holds gains as AI earnings and softer oil underpin risk. So if it's underpinning risk, it's sort of disposing of risk. It's putting risk on the table, right? They're not worried about risk. There's not much risk because we're moving higher. We have momentum. Absolutely. Awesome, guys. Cool. Smash the like button if you haven't already. The newsfeed on the right. Where did we have? So I didn't see anything about the NASDAQ moving lower, or are you referring to like this reaction over here? How it says tap to monitor, and it has that function. So you could click that, and then that'll bring that asset on your table over here. So something you do want to keep an eye on, and something that this is a phenomenal question. So really good of you for asking that. I always tell people to, if you have a question, don't hesitate, because if you have that question, somebody else probably has it. So in terms of, well, what if it says NASDAQ to move lower off this headline? We don't want to be taking every single headline with every single small narrative change as the make or break of the market, because each headline is going to have that different weight. Like I mentioned before, if Trump comes out and is like, we're going to attack Iran crazy hard tonight because they're not coming up with a deal and we're frustrated, it's going to have an impact on oil. That's a stronger headline, a more market moving headline than something like July ADP non-farm payrolls rise 44K. Missing estimates, right? This July ADP non-farm payroll is not a typical NFP, unemployment data. So we don't want to take it with that much of an impact. We want to sort of take it with a grain of salt, be aware of it, but just keep an eye on it. So great question. You do want to be careful. You don't want to take every headline for what it is. And something else to mention too, guys, let's say it says bullish. Let's say it says reversal risk. Does that mean no short positions can play out? Absolutely not. Markets are always going to be moving, but rarely are they just going to move in one direction. Except if you look at yesterday. Yesterday was a good example of how markets can sometimes just move in one direction. That was a wild move on the S&P. But guess what? We take in for account what markets are doing. Look at what we did on Monday. We did have a pretty strong grind higher. And what happened on Tuesday? We had follow through even stronger. So again, looking at this chart right now, we went over it earlier where I said, you don't want to take a random short because a 5-minute looks weak when we're so bullish. You would have taken a short and then boom, got stopped out. So it's not so much, oh, shorts can't play out. It's not so much you shouldn't take a short. It's more so you want to be aware of what markets are actually doing right now and taking that into consideration. When you take that into consideration, that's when things will start playing more in your favor, because instead of jumping in that losing short trade over here, so look at the replay for a moment, guys. Yeah, you would have been like, wow, look at that. We rejected pre-market highs. If markets were ranging any other day, you would have taken this short, stopped near the high, and you would have looked to play it to VWAP, would have looked to play it to the other side of liquidity, whatever you want. But guess what? Markets are bullish, and they do not want to pull back. So when markets are bullish, and we have that more bullish fundamental and that bullish bias understanding, instead of looking for shorts, we want to look for longs, because we know longs actually have a much higher chance of playing out because that's in the same direction of current market sentiment. So what time do I trade? Great question. So I like to trade between the window of 9 to about 11 a.m. Eastern. So about a 2-hour window right there. Something I tell traders, and I help traders as well, sort of some mentoring and whatnot, is that you want to be as consistent as you can when you're building your routine, when you're building your strategy, when you're building your system. You can't be a consistent trader if you're trading the New York session one day and then later jumping on Asia session, or you're trading New York session key levels one day and then you're trading the opening range breakout the next day. You want to have consistent strategy, a strong foundation, a good system. I go over this breakdown often with our community at Market in the Morning. Trading isn't just strategy. Trading is like building a house. When you build a house, you need to put down foundation, right? So the foundation to give us some sturdy ground. Let's say your foundation, mine, is supply and demand. You need to put up some walls to keep everything within. That's going to be your risk management. You put a roof over your head, right? That's some confirmation, confluence. Put some doors and windows, right? That's your trading psychology. Trading is not just let me buy, let me sell. As much as, yeah, we can make the argument trading's buying and selling. Sure it is, but if you're gambling, yeah, that's all it is. If you're building something consistent and reliable, then it should have more structure. Structure like building that house. Guys, awesome analogy. I hope you guys understood that. Yeah, throw me a thumbs up if you did. So here we go. We see we're pulling back. Again, I can't emphasize enough. I'm not going to be like, oh, guys, we're selling off now. Now we have to go short, because I know the odds of a long playing out are much better. Does that mean shorts can't play out? Absolutely not. But what that does mean for me, at least, is I'd much rather see price react to a recent low to reverse back higher. I'd rather see a long position play out after sellers come in and get reversed on, right? Because we want to be trading on the opposite side of that. When we enter a trade, we have to ask ourselves, if I'm buying right now, who's selling to me? And if we're saying I'm buying right now and institutions are selling to me, well then if institutions are selling, we know that's the smart money. I don't want to be buying against their sell. I also don't want to sell against their buy. I want to buy when they're looking to buy. And as day traders, we know that institutions will always try to make price look one direction before reversing to the other side. So ideally, I would like to see the 77.80 pullback level. Take a look at ES here on MRKT. Look at that, 77.83 support zone. That lines up right with that key level that I had on MRKT. That is huge, right? So there's a little confirmation right there. I found my own pivot level over here. MRKT also is giving us the bullish bias. It's also giving us a support level. There's a lot lining up confluence-wise for me to be looking for these longs on ES at this low. Yeah, guys, use discount code CF. That is for Chart Fanatics. CF for 20% off your MRKT subscription. Absolutely worth it. Cheapest out there. And quite honestly, guys, I mean, it's cheaper than an evaluation account if you trade evals or funded accounts, right? So you say you trade evals and you're buying one a week, MRKT is only $50. Throw on top of that the 20% off with code CF. It's like $40. That's a steal right there. Take advantage of that. Absolutely, guys, for sure. For sure. Guys, any other questions? Let me know in the comments. This has been a phenomenal stream so far. I love the engagement. Make sure you guys keep engaging. We'll keep things running through. We'll take a look at some NASDAQ price levels now. See if NQ is giving us anything with a bit more confirmation. Do you have a Discord I can learn? Yeah, I don't know if I'm allowed to drop that, but we'll see. I'm sure I could drop my Instagram. If you guys want to follow me on Instagram, it's Trading with Kev. So TRADING with Kev. That's me. Shoot me a message on there. But yeah, no, we like to go over everything. I go live for the MRKT team as well from 8:20 to 10:30. So today I told them, listen, the show's got to go on. I got to cover the Chart Fanatics stream. Boom, here we are doing this 8 to 9, going to be jumping on there 9 to 10:30. So we want to be consistent. We want to give some follow through, and we want to have structure on our trading. So looking at the NASDAQ, what can we do? Well, guess what? MRKT, it's not just a cool app on a web browser. It is also a Chrome extension. This is absolutely sick. Like, I don't even know where to start. So let's take a look at our Chrome extension. Let's look at the NQ right here. It's giving us daily bias on NQ is still bullish. Fed rate hold keeps financial conditions relatively supportive for growth stocks. We know that NASDAQ is primarily tech and growth. So that's supporting NASDAQ right there. Trump's push for Iran nuclear talk reduces extreme geopolitical tail scenarios. Another strong positive. So what we're doing now is we're seeing confluence with our fundamentals. How cool is that? We look for confluence in our technicals. Well, now we want to look for confluence in our fundamentals to show us there's just that much more strength in the current bias. Whereas if we don't have that confluence, let's say we're looking at Fed rate holds keep financial conditions relatively supportive. But then on the other side, it says Fed hawkish tilt and hike risk keeps discount rates elevated. Fresh Iran attacks and shipping incident revive war and oil concerns. If these are more new or hold more weight than these, then guess what? Things might start to see a pullback. We might start to get an indifference in the market. We want to be aware of situations like that. So let's take a look, see if we could open this up a bit and hit explain right here for fresh Iran attacks and shipping incident revive war and oil concerns and something else. Right? You want to know what headlines come out, but you also really want to know how have markets been reacting to these headlines lately. And quite honestly, when we've been getting these fresh Iran attacks, it's not giving us that huge 1% drop, that huge 500-point drop on NASDAQ anymore. It's giving us a small move, and then that's usually followed by that extreme follow-through when a new ceasefire deal is there, when a new talks of a peace talk start prevailing. So at this point, what we're really seeing in the market is big institutions, big investors milking this bull run, milking the AI rally. Things are still bullish. There is no doubt about it. Awesome, guys. How do you get these support levels on the chart all at once? Oh, so you don't get those price levels. The support and target levels, those don't show up on your trading view. These are on the market AI terminal, the MRKT. What's cool too with the terminal, I'm glad we brought it up, is you could click one of these candles. Let's say we saw this rally to all-time highs and we're looking at it like, what just moved markets? You could click a candle right here on the chart and it's going to analyze it for you and tell you exactly what the main driver was during that candle, during that time frame. So what happened here at 10 a.m. yesterday on August 4th? Hormuz progress and weak U.S. data sparked broad risk on buying. Move started immediately after 10 and Rubio comments. Oil sold off sharply. We know using our market terminal, oil selling off sharply supports equities. He even says it right after that, lifting equity futures. U.S. factory orders and jolts both missed forecasts. And stocks were already near highs on AI and deal optimism. This is everything I could cover for you guys without the terminal because I do my research, because I'm up to date with MRKT. But if you're brand new, it'll get you up to speed like that. That's also one of my favorite parts of MRKT is you don't need that experience. You don't need exposure. I didn't go to college for finance. Guess what? I didn't go to college to learn about rate cuts and rate hikes and all that. But MRKT makes it understandable for the retail, and that's how cool that is. That is an advantage. We always want to give ourselves an advantage and an edge when it comes to trading. Let's see, we just had a headline. So here's an example. Oil loading suspended after brief resumptions because of safety concerns and tanker shortage after drone attacks. So somebody might look at this and be like, oh, wow, that's super bullish on oil. Meanwhile, let's take a look at the oil chart. I doubt it barely moved. It barely moved. This headline, yes, it's a breaking news headline, but it is not that strong of a source. We have to be able to recognize the strength from the weakness when it comes to these breaking news headlines, as they do come out not every minute, every 10 minutes. It does come out every minute. If Trump is on, let's say, a Fox interview and he's dropping words left and right, it'll say Trump says this, Trump says that. Even when Kevin Warsh is live for an FOMC meeting, if he says something about inflation is cooling faster than we expected, boom, it's going to show up on the market terminal for you. If he says something on the opposite side, it's going to show up on the terminal. You could click that icon. You could say explain, and it will tell you exactly what he meant and what it means for the markets. Guys, this has been phenomenal. Definitely keep dropping some questions, drop some tickers, let me know what you trade. I'm a big ES and NQ trader. I do like trading gold and oil as well. I haven't traded oil though in over 2 years. It has been since before Trump initially announced the whole new tariff situation that oil prices just went sideways. There was uncertainty in the economy, markets sold off, and then we had that beautiful reversal, right? We had that reversal in April for Liberation Day. We went to all-time highs from there. Well, guess what? Oil was not able to return back to a steady price point and consistent, so I'm staying out of it. Being able to trade multiple markets, even if it's just a small handful, ES, NQ, gold, it gives you different opportunities. Markets are always presenting different opportunities, and if one asset isn't giving us the proper or strong trend, then we're able to say this asset isn't trending right now. I want to leave it alone and look to trade S&P 500, NASDAQ, something with more relevance, something with more strength. So taking a look at gold right here, gold's finally trying to push higher. Now, if you do trade gold, what you're definitely going to want to keep an eye on as well is the dollar. That would be the DXY, US dollar currency. Now, take a look at the dollar over here, guys. I gave the dollar this yellow zone. This was a support zone from 2023, 2024, and then all of 2026 and some of 2025 last year, we've been holding it as a resistance point multiple times, and that was helping gold continue its rally to all-time highs. I'm sure you guys remember gold went absolutely parabolic, and it made its way all the way up to 5,700. Look at that, all the way to 5,700 when the dollar was cracking back below, almost below 95. Then what happened? We came back up, rejected again. Gold was trying its best to hold. And as soon as we started breaking out here, we found some extremes. Gold started to base out. I said, I'm not looking for any longs on gold until the dollar can sustain back below that 100.21. Guess what? Dollars have been trying to sustain below that, and here comes that squeeze on gold. So this is a nice confluence. Now, guys, we talk about confluences and confirmations on a 5-minute chart, on a 15-minute chart, when we're looking for entries. But we should also, like we went over before, be looking at it when we're looking at our fundamental analysis, when we're looking at our day trading, our daily, our swing trading bias. Confluence is key because the more confluences you have, the higher probability of that trade setup. When you find one reason for an entry or one reason for a move, that's not as strong as having multiple reasons for a move. Yeah, I'll put XAU USD on the chart on the right hand side. Guys, just know XAU USD GC, look at that. As soon as I switch the chart, it is identical. Only thing that's different really is the price level that we're at. For the most part, though, same support, same resistance, same follow through, same trend, and of course that same inverse to the dollar. So what do we have? We have the dollar continuing back to the downside, gold trying to break out of its range. Now, again, long-term wise, gold was over 30% from its all-time highs. That is a massive pullback area. So what was the question? These red boxes on your trading view, is that an indicator you are using for support and resistance? If you're referring to, so the red zones, no, those are all mapped out myself. So again, I mentioned earlier, supply and demand is really my foundation for my trading strategy in terms of technical analysis. So what I do is I do my top-down analysis where I go from a daily time frame, find areas of resistance, look at how well this worked on gold multiple times, break it down to a 4-hour, do the same thing, see if there's any support anywhere, any resistance anywhere. I see this support held well. We wicked it a couple times, created a new one right here. I can now update that zone. I take my updated zones, I take my own analysis, I line it up with MRKT. If this gives me confidence, I take the trade. If MRKT is saying, oh, well, you do want to be careful because A, B, and C might pull us back, and let's say we get something much stronger on what could flip the bias, then I'm staying away from it, especially because looking at gold right now, we're at the top of our range that we haven't been trading at since June 21st. That is over 47 days ago. That is a while, guys. It's been a while since we've been here trying to break out of highs. Last thing we want to do as a trader is be a breakout trader, because 9 times out of 10 those usually fail. But with fundamentals leaning more bullish, I also wouldn't be so quick to be like, let's short this right now. So I would be very patient on gold. I'd let today play out and close on gold. If we get a strong rally and we close somewhere up here on gold, on XAU, GC, then yeah, I'd be looking for continuation the following day. And guess what? Today, I'll be looking to trade ES, NASDAQ, something that has already shown me momentum. Guys, look at that. That's what I'm talking about. I said don't just take random shorts. I'm not just going to go short down here because it looks like we're trying to drop. And if you did, you would have been selling low just to get out at the highs. Trade with the trend. If you don't see your setup, you be patient. And if your setup is down here, you wait for the pullback, then you take your entry. You want to be careful shorting because you're looking for a long entry, right? Shorting targeting your long entry. Yeah, of course, got to look at the VIX. The VIX is also a good go-to when trading the ES and NQ, and it's also a good confluence. So I like to mark out key levels on the VIX, and when I find these areas, I will look at the NASDAQ and S&P and see, is the VIX at an area where it's trying to reverse lower, and then is ES at an area where it's trying to hold and continue higher. Now, something I do want to point out to you guys, and I'm glad you mentioned the VIX, because I forgot about it for a moment. Yesterday, take a look at the VIX price action and ES price action. VIX had a nice push higher, pullback, continued higher, while ES continued higher. Now, I'm sure you're going to wonder, well, the VIX is supposed to be an inverse to the ES. What's going on here? We have to remember that the VIX is a volatility index. So if it's moving higher, it's also measuring more volatility entering the market because it's weighing the SPX options that expire within 30 days. So yes, we're moving higher, but what that's also showing us here with the VIX now is that institutions are starting to hedge. Institutions are starting to be more aggressive with their options buying and selling. Right? So when we see that, yes, it's going with the trend, that's not a good confirmation, so we would want to leave it alone. On any other given day, though, usually we will find, oh, look, ES is moving higher, VIX is moving lower, right? Something strong like that. So great question, absolutely. Another form of confluence, and I would definitely recommend anybody that trades the ES and NQ, keep an eye on the VIX. Again, it's another form of an edge. Take a look at MRKT, see if there's anything valid here. And what's cool too is let's ask market. New chat. What's the bias on the S&P futures today? Here we go. Let's see, send it out. Yes, sir. Guys, make sure you smash that like button. Who's been having fun in this stream so far? Comment, learn if you've learned something today. This has been a lot of fun. I absolutely love hosting, love giving you guys some good information and education. And really, MRKT makes it that much easier for me to teach, for you guys to learn, for you guys to have that fundamental edge that used to be reserved for people with a huge, massive 30K a year Bloomberg terminal is now accessible for you guys at a fraction of that cost. Sentiment on S&P 500 futures is bullish, 78.02. Hormuz deal progress is crushing oil and inflation fears. I mentioned that before, but if you don't know that and use MRKT, MRKT is going to tell you about it. Supporting the risk-on rally into 7,900. Great. Watch the Fed. There we go. Watch the Fed inflation hawkish pushback and oil shock warning flips it. Okay, so again, it's telling you, keep an eye for that oil shock. Keep an eye for everything. Appreciate you guys. Absolutely. Listen, man, these streams are only as good as you guys let it be as well. It's all about building community in these types of streams. It's great because you guys could engage. It's not just like a TV show where you plot it on, you sit down, you sit back, and you listen to somebody else yap and give you their own opinion. This is facts only, learning opportunities, and proper insights that you could better yourself as a trader with. So big kudos. Show some love to Chart Fanatics for always keeping these streams going. Comment CF, smash the like button if you haven't already. This has been absolutely phenomenal. So what did it do? It gave us a rundown on the S&P 500. It gave us a pullback level. It gave us a price target near 7,900. This is wild, guys. What you guys think we're going to hit that today? Let's see. Why is the day sentiment leaning bullish? It says, because Hormuz deal eases oil and inflation concerns, Iran talk optimism drives oil prices lower, and Fed futures pricing less September rate hike. These are a whole bunch of great confirmations for a bull market. Let's take a look at, here we go, interest rate tracker. Now what's really cool too is MRKT has integrated an interest rate tracker with different probabilities. So when we're looking at September, we see that September at some point of a 25 BPS increase, it was at, let's see, I want to say it was at, is it going to tell me? It should. There we go. 60% chance of a September increase at some point. That has declined to now just a 45% chance. That is more optimistic. Rate hikes are a lot more bearish on the market because it makes borrowing more expensive. Big companies don't like that. Rate cuts give us optimism. Awesome. Yeah, I'm happy to help, guys. Always. Always. Sweet. Great, guys. What is going on with gold today? It's full boom. Yeah, so gold, if you want, you could rewind like 10 minutes, 15 minutes. We just covered gold and the dollar. Why I believe and why I want to see gold start to reverse back higher is mainly driven by that dollar. We'll take a look at the DXY. Being able to fall back within that range. When the dollar was within this range, gold had a beautiful and much easier time to trend higher. When the dollar was at these extremes near that 100, guess what? Gold was seeing major resistance. It was seeing pullbacks. It was having trouble continuing. Now the dollar's back below that zone, trying to move lower. Gold is also trying to move back higher, breaking out of this range. So there we go, right? We look for something like the VIX to inverse the S&P. We look for the dollar to have inverse to gold. Both of them trying to break out of their range confirms a strong breakout. What's up, Mike? Good morning, brother. Good morning. So really good stuff there. I'm excited to see where gold moves. I'm most likely not going to be trading gold myself today. I'll probably wait for tomorrow to get that follow through, get some continuation, and see if we have a more proper breakout and we continue higher. Because at this point, when we're looking at gold, yes, it looks like we're trying to break out, but we're at extremes. Do we want a trader that buys the absolute of a range that we had for over a month on gold? Or do we want to be a trader that has the ability to just wait one more day to see, do we close outside of this range? Do we close higher with volume picking up? And then if that's the case, yes, we can look for those gold trades tomorrow. That's what I'm going to be looking for. I'd be very careful with trading gold today. It's at some extremes. Fundamentals are still leaning bullish on it. We could take a look at GC real quick one more time. What's supporting the bias on gold? Geopolitical and shipping and for safe haven assets like gold, yen, and extravention concern highlight currency instability supporting gold hedges. That's also huge, guys. Let's hit explain on that. Have MRKT give us a breakdown. So risk off bias edges higher as joint and instability underscore broader volatility, reinforcing gold's appeal as a defensive hedge. The key channel is growing skepticism about fiat stability and potential repeat intervention, pushing carry trades towards gold. Remember, gold is always going to be that hedge against a lot of currencies. So watch JPY positioning, Bank of Japan policy signals, and any renewed dollar weakness, which could further support XAU and pressure US yields, Japanese X. Now, something to add to this, we went over this is how it helps gold, but when we do see something like pressuring US yields and bringing yields to the downside, that also helps support bullish S&P, a bullish NASDAQ. So again, we're seeing those confluences. We're seeing multiple reasons. I call it the and factor. When you can take a look at a trade and you're taking a trade because, let's take a look at ES, for example. ES, we'll put NQ over here too. And let's say we're taking this trade because NASDAQ's breaking out of resistance and ES is at all-time highs, volume's picking up, and we're breaking out of the orb, right? Whatever your system is, whatever your strategies are, you're taking a trade because you're saying this is happening and this is happening and this is happening. You're adding probabilities, you're stacking confluences, you're giving yourself confirmation. It's going to have follow through. It's much stronger than a trade that you go, oh, ES is breaking out here, I gotta go long because we're moving higher. There is no I gotta go long in markets, because that's not real reasoning. You want reasoning with the markets. You want probabilities. You want possibilities. But you want to ask yourself, really, is this probable? You want to ask yourself, what are the true confirmations here? So right now, all-time highs do get a little tricky to trade. I mentioned take a look at key psychological levels, 7,800, 7,825, 7,850. These are all levels I'll be watching on the S&P today as possible price target, as areas of interest, right? AOI is what I call them, areas of interest that I'm going to say, great, a strong break and hold above 7,800, we're looking for 7,825. Strong break above that, 7,850. Because we don't have any historical levels at this point, we have to look for key psychological levels, because those are 100-pound resistance 3 times. Hasn't happened. When that hasn't happened, we want to look for those key psychological points. Guys, any last minute questions, let me know below. We are going to be wrapping up this segment in just a couple minutes here. I do hope you guys learned something. That is the whole goal, is to guys see that and give you a little bit of insight into how to use MarketEdge.ai, a terminal that you need in your trading to give you an advantage. So guys, up any questions, make sure you smash the like button if you haven't already. It has been an honor and a pleasure doing this live stream with you guys here on Chart Fanatics again. If you ever want to reach out, please feel free. If you want to see me again, I'm sure I'll be back here sometime soon, but let me know in the comments. If not, have a great rest of your day, everybody, and trade carefully.
Good morning, everyone. Good morning, good afternoon, good tag. We do it again. So we have bonjour, bonsoir. Yeah, and more things. But we're gonna just lock down on the English one. How's everyone's doing today? I know. I said we have a new trader today. I did say that. So you are not expecting to see me. I know. He's more intelligent than me. He's way much better trader than me, because he can read candlesticks. I can guess candlestick, like Andre loves to say, which is I kind of agree. That's why I'm learning also the entire order flow, bookmark, etc., etc. So I'm learning too. You're not gonna see me doing now. So that's why we have people who are professional and they know how to express those candlesticks. Okay, you let me do the guessing. They do the professional stuff. So yeah, we're gonna have a new trader today, but before. I just wanted to do like a quick introduction, because it's going to be his first day. Hopefully you're going to see him more. Benfica. Yes. Yes. I bought this one for when we played against St. Gallen. I was watching the game. We won 5-0. I'm saying we because now that I live in Portugal and then my entire family supports Benfica, I don't have the choice. So I'm juggling between PSG and Benfica, which is fine. Good morning, sir. Yeah. Hello. So, quick one. No need to share. Yeah, that's fine. Yeah, I would say. So, quick one. Before I leave, let me double check quickly. You're losing so much. Well done. Thank you, man. Thank you. I mean, to be honest, I got I got stomach bug. So I couldn't lose weight properly for 10 days, but now I'm back in the business. So we are just quickly, let me get my one thing on the stream. So on NAS, I'm not gonna share my screen, no point, because we're gonna move anyway. But hey, what a great move on Monday! That was actually ridiculous how good that was. But yeah, I think it's already on my side now. Yes, it's already on my side. So, producer, if you can bring Mr. So I don't know how to say this correctly. So I think you can hear me, Hui?
Yeah, Hugh.
Hugh. Okay,
Yes.
nice. Okay, so perfect. So nice. We have the two screens.
Amazing.
I think you need to be a little bit more in the middle because we can see only half of your face.
Like that? Is that fine? Or a
Yeah,
bit more?
I think it's a little bit more.
What's
A
up?
little bit more. Yes, now it's better. So
Amazing.
we're gonna put the link after in the Discord and stuff. But yeah, guys, today I let you on the good hand. Okay, be kind. Don't be dickheads. Okay. I know some of you guys now. Okay, it's been a while. I know some of you guys can be sometimes a little bit tricky with the giveaways and stuff. He's new. Don't be a dickhead. Okay, I trust you. And if I don't trust, I mean, I have a couple of guys in here. Look at who we have. Falak is taking care of it. There we go. Falak is here. You guys know our Falak analysis. Okay, so if someone is doing a messy thing in the chat, Falak will take the sword and he will cut you in half. Okay, everything is fine. Let the man speak. Okay, apologize. Who?
Amazing. Yes. Hello. It's a pleasure to meet all of you guys. My first time streaming, It's an absolute pleasure, to be honest, with Chart Fanatics. And yeah, hopefully we have a good stream, everyone.
Yeah, I mean, to be honest, it's gonna be hard today because Nas has been flying. So I don't know
Yeah.
what your plan is.
We'll have to see, because to be honest, like since the start of this week, price has just been it's been grinding slower, but it's been grinding higher, but very slowly. It's a bit difficult to trade, to be honest with you. Summer PA is definitely hitting, but we are nearly at all-time highs. ES is pretty much at all-time highs. It's broken all-time highs. So I'm just waiting for NAS to follow through as well. Wouldn't really want to be a short seller in these markets.
Yeah, I do agree. It would be tricky.
Yeah.
It would be a tricky one. But yeah, I'll leave you there. Enjoy the stream, guys. And we catch up next week.
Amazing. Thank you. Cool. How's everyone doing? Summary on my trading style. Sure. So basically, I trade with order flow, right? With auction market theory. And essentially, what I am looking for is the two stages of delivery in the markets, right? Once you've understood that the market's main aim, its trading objective, its objective is to facilitate as many transactions as possible, you will understand that as a result, there are two stages of delivery in price, right? The market always wants to move in fair value. This is essentially where they are able to facilitate as many transactions as possible between both buyers and sellers. The market is constantly finding levels for acceptance for both buyers and sellers where they are both satisfied. So you get your two stages in delivery, which is balanced and imbalanced. Once you've identified the balanced stages of delivery, then you could start to look for your consolidation plays. And then once we break and retest, you're looking for your imbalanced stages of delivery. And I pair that with order flow as well. So I'm looking at who is in control and so on. So yeah. One second. Can you see my screen? Yeah, let me see. Okay, cool. And can I change it to a different screen midway as well? Or should I? Okay, let me test it. Sorry guys, let me test this. Does that work? Can everyone see this? Okay, amazing. All right, so if that works, let me expand this real quick. Okay, so like I said, I'm just looking for balanced areas in price, right? Where is the market balanced? Where is the market finding fair value? Where are both buyers and sellers satisfied? Once I've identified those levels, they become levels where I'm treading a bit carefully because you're going to anticipate for prolonged consolidation. So for example, the way I do my top-down analysis, the way I'm looking at the chart every time I come onto the chart, I have these 3 charts up. So the top right is going to be my TPO, time price opportunity, and this market profile is based on the regular trading hours. So 9:30 open to 4 p.m. closure, right? Top left is my TPO, but for extended trading hours. The key difference between this one and this one is that here the value area is being calculated based on time. On the right, the value area is being calculated based on regular trading, based on volume, right? So, and then at the bottom, I have your usual volume profile, your normal market profiles, the volume profile. And what I'm looking here with the volume profile and using these 2 in conjunction is where the market is finding most time and where that is being supported with volume. So when you're looking at the volume profile over here, this value area, by the way, is based on the volume. And I'm looking at the value area. I'm looking at where value is being built. If value is being built higher, that means most of the transactions are being facilitated and a level where both buyers and sellers are satisfied at higher prices, right? Because the value area represents 68 to 70% of total transactions. When there are more transactions, then that is a sign that both buyers and sellers are satisfied at their specific level. That's why you get your high volume node, and that's why you get your low volume nodes. Low volume nodes, which is what these are, this is one-sided price action, right? You don't get much. This is where one side was heavily in control. You don't really get much satisfaction between both buyers and sellers. They're not really finding balance there. So I'm focusing in terms of narrative. I'm focusing on my value area where value is being built. And then I'm using TPO as sort of like a divergence, because the market can spend a lot of the time at lower prices, but if volume isn't being built there and volume is actually being built at higher prices, then you have your divergence for higher prices. That is essentially how I would use TPO in conjunction with my volume, right? Because volume is what moves the market. The market moves based on supply and demand. If there is more supply than demand, the market is going to move in that specific direction. If there's more demand than supply, then the market is going to move in that direction. So that is how I would do my top-down analysis to build a context with my TPO and my volume profile. And if you go to H1 and M12, I'm essentially looking for the same thing, right? I'm looking for the exact same thing, but this time with the delta cluster. So delta is the difference between aggressive buyers and aggressive sellers. I'm looking to see who is in control on the immediate time frame that would support my narrative. So if I'm looking for higher prices, if value area is being built higher, then I obviously want to go onto the H1 and M12 to confirm that we are currently building higher as well. I am mainly a scalper, by the way. So if I change my screen back to my main chart, I'm mainly a scalper. So I'm looking at the 80 range chart, which is when I don't really look at time frame charts when I'm scalping. I do have time frame on the left because Excel charts, there's a bug with big trades and stuff. So that's why I have the time frame chart on as well, because the big trades bubbles don't work really well with the range charts on Excel for some reason. But yeah, so I'm on the 80 range chart. What the 80 range chart basically is each candle from the low to the high or the high to the low is going to be approximately 20 points. So when I'm trading order flow, I just removed the time variant of this, right? There's less variables to worry about, and I could focus more on my big trades. You're a scalper? Yeah, I am a scalper. Well, I'm pretty aggressive. I am pretty aggressive, but I'm not a hyper scalper. I take like maybe 4 to 5 trades a day on average. But yeah, so as discussed previously with the value area, when I'm building a narrative, when I'm looking to build, my context for the day, this is where I would jump down to my execution time frame now. And then I'm a range trader. So I trade based on ranges. I'm looking for levels where there is passive protection. Yeah, no, I use Excel charts. Yeah, this is Excel charts. I've never used deep charts, to be honest. I've always been an Excel charts person. Trading NQ slot. I trade NQ solely. I don't watch ES for divergences, no. I solely just focus on NQ. I'm just focusing on the miniature price action. Yeah, so in terms of lines, okay, so let me continue with breaking down how I actually trade. So once I've identified my narrative, once some values being built higher for today, I'm going to be looking for higher price action, right? I want to use the previous day's value area as significant levels, because as long as as long as price is above the previous day's value area high, then you are in an imbalanced state of delivery, and this is where you would expect for price to continue in an imbalanced state of delivery for higher prices, right? That is why I mark out the previous day's value area high, value area low, and volume point of control. I mark out the volume point of control because it signifies a low probability level for me. I don't use that to execute any positions. So those are the 3 levels I mark. And then in confluence with that as well, I also, like I said, I am a range trader. So I also mark out immediate ranges where you have passive protection levels. What I mean by passive protection level is there are 2 types of players within the market. There are aggressive buyers, aggressive sellers, and passive buyers and passive sellers. In order for a transaction to be facilitated, an aggressive participant has to be paired up with a passive participant, right? So with order flow, with delta clusters, delta profiles, big trades, you can only see aggressive players. When you have aggressive participant heavily in control, like let's say this level over here, right? You have 32 aggressive buying contract heavily in control at this level. As a result, this is where you would expect for price to continue higher because these aggressive buyers are in control, right? But that is where you get your passive protection level come into play. That is where you get passive sellers because we are unable to continue higher. This means there is more supply than demand. So supply at this level in the form of passive selling is heavily overwhelming aggressive demand. Hence why these aggressive buyers are unable to move higher. And as a result, this becomes my key level, right? This is a key level because the market has good memory. When price comes back to this level, you would expect for the same passive sellers, for the same aggressive sellers to step back in and protect that level again. So that is how I determine my key levels. And then I would do the same thing on the opposing side. So let's say over here, right? This isn't the cleanest example, but let's say all of these bubbles were, by the way, the blue bubbles are my aggressive buyers, the red bubbles are my aggressive sellers. Let's say here the majority was aggressive selling, right? This would become a passive protection level because passive buyers are protecting this level. So now you have your range. This is your range high, this is your range low. This becomes a balanced state of delivery for me. Well, anytime, right? Let's imagine this price action didn't happen. Anytime we come into the low or we come into the high, I'm looking to see on confirmation with order flow if these aggressive sellers get absorbed or these aggressive buyers get absorbed. Then I will look to go short to the opposing range low or long to the opposing range high. So that is how I would play my my balanced state of delivery. With the value area high and the value area low, it's the same thing. I'm looking for the same thing, right? It's always going to be levels of passive protection. And I'm always looking for confirmation to whether we defend that level or we don't defend that level. So those are, the previous days is going to be my key level. And right now, this is my current key level. So let me double check. By the way, the 30-second time frame, I don't do any analysis on this. I'm just using it to double check my big trades, right? So, like I said, exit charts, there's a bug with big trades on a range chart. Here, for example, let me try line it. Right, somewhere over here, there is a big trade, but it's not showing on a range chart, which is why I have my time frame chart because the time frame isn't a broken one. So that's all right. So now let's set up for the day. Two, 9, 4. So what I'm marking is just the prior day's value area. Right, nothing special. 29958. Free. All right, so this is the previous day's value area, right? We are currently playing within the previous day's value area. The value area is a balanced range, like I said. It's going to be low probability. That is where both buyers and sellers are satisfied previously, hence why they are able to facilitate 68% of the total day's volume within that level, of the day's total transactions within this level, within this range. So when price comes back into it, you would expect for consolidated price action again. I am using exocharts. Exocharts, yeah. So this is the previous day session. Now, if you start to build context, going back to, let's move this here actually. Right, here's what I think for today. If you look at the volume profile, value area is clearly building higher. We do have low volume nodes, which is an inefficient pricing, but this doesn't mean it has to be filled in immediately. Until we get any form of confirmation here and a reversal to fill this in, then you can look to short to this level. However, low volume nodes could also be a bullish confluence or a bearish confluence, depending on, where it's formed. Because this means aggressive buyers were clearly in control. They were very one-sided, right? Demand was very one-sided here. There wasn't enough selling supply to facilitate anything here, and hence why the market moved really quickly, fairly quickly, and this had no interest. So this price range, there was very little interest here, very little auction that happened. So that's why it becomes a low volume node, and you could use this to anticipate for higher prices until price shows some sign of a reversal. Then you could look to go short to this low. But if you look here, we are coming into a level of previous balance, right? If you remember, like at the end of June here, we were consolidating for like over 10 days. And this is a level of balance. This is a consolidated range. So when the market comes back into it, you would expect for some sort of continued consolidation, right? That is what you would anticipate. So we could start to just consolidate here for today before we break above higher and continue higher going into the end of the week. Or, depending on how price moves, we could just explode higher. Right, but I wouldn't be looking for shorts at the moment. There's nothing here screams shorting the market. It will be very low probability. Value area is just constantly being built higher. Buy low and sell high today. Yeah, I would be looking for longs. Shorts don't. Shorts don't really stand out to me, guys. You don't want to short these markets, seriously. Unless you're scalping, like there'll always be opportunities if you're scalping to take trades in both directions. But generally speaking, you don't really want to short these short this market. It's pumping higher, like, and if you look at ES, let's wait for this to load, and then ES. Where is it? Yeah. How do you check order flow? I check order flow with exocharts. Specifically, yeah, in terms of order flow, I use the Delta cluster. Short the entire range. Yeah, I also wanted to short and catch those small opportunities every time we broke in above at the high. But, it was just a really slow move higher. Slow grind higher. It's not the best price action, to be honest. The way I trade, the best way for me to trade is whenever we are in an imbalanced state of delivery. That is where I'm going to get the majority of my high risk to reward trades. Yeah, we are very close to all-time high, especially with ES. So if we wait for this to load, it's taking forever. Let me check. Might even be easier to show you guys it on TradingView if this doesn't load. We're getting there, lads. We are getting there. Okay. See, this is the problem with exocharts. It's just extremely slow. Hopefully they optimize it in the next few updates, but it is what it is. Let me try maybe Trading view. All right, let me get it on trading view for you guys. Move it here, and then all right, so you should be seeing trading view now. You know, this is what we have. Like, you can look at it from a price action standpoint as well. You don't always need order flow. The market only moves in balanced ranges. When balanced ranges is shifting higher, so let's say, like, I'll break this down for you guys, right? Here we have a balanced range, large consolidation, which means both buyers and sellers are satisfied at this level. Eventually, one side of the market is going to get more aggressive. So whether that is sellers or buyers, right? Eventually they'll no longer want to they'll no longer be satisfied with facilitating transactions at this level. So they'll be like, I don't want to facilitate anything at this level anymore. I'm no longer satisfied. I'm going to get more aggressive and try to break out of this level. And as you can see here, aggressive sellers break out below this low. And this is where the question comes, whether they could find acceptance at lower prices or not. If they are unable to find acceptance below here, and you get this reversal like how we got here, then the market is going to try its best to come back to this previous level of balanced price action, right? Because that is where the market is most optimal. That is where it is finding fair value. So once it comes back to this level, you could just get something like this, where aggressive buyers are just clearly in control and they break above completely, not wanting to facilitate any transactions at this level anymore, right? And then the value area starts to shift higher again. So now it's gone from here, lower, sellers fail to find acceptance in the form of balanced ranges, aggressive buyers take control, you break above. Value area is now shifting higher. And as you can see from ES, we break above again. So now aggressive buyers are clearly in control. The break above this range is high, and now you're wanting to question whether we could find acceptance above here. How you find acceptance is when you have aggressive sellers try to step back in, but they do not get rewarded with lower price action back inside this range. Because anytime you break above the range high or you break below the range low, the opposing side is always going to try and step back in to bring price back inside this range. It's as simple as that, right? The market wants to move in fair value. So this is going to be a protection level. This is going to be a protection level. If we break above and we start to consolidate, that is a good sign that value is being built at higher prices and we're going to shift higher. Right now, it looks like we're going to shift higher. Anyway. But yeah, ES, the main thing for ES is that we're at all-time highs. So all-time highs, I would expect for NQ to follow through as well. Like, yeah. However, like I said, we do have this balance range. So that is something to look out for. But the one thing I wouldn't do is be a seller here. So let's share this screen again. All right. So that is what we currently have. I mean, ES finally loaded. As you can see, it's the exact same thing. Yeah, it's the exact same thing. Value area is just being built higher. Value area is indeed just being built higher. July's opening price? Where is that? Let me check where that is. Yeah, I mean, it's too soon to tell. Like, to be honest, right here, we have this high that I'm looking for. And then we have this low that I'm looking for. This is the current range I'm playing in. And this is how I trade all the time. All I'm looking for is to identify the range high, range low, based on passive protection levels, and anything in between. I don't really want to satisfy anything in between. If we come up to here and we get buying absorption, then you could look to go short. If we come below here and we get selling absorption, then you could look to go long. However, it's going to be pretty, this level over here is going to be pretty low probability, because if you go long here, your risk to reward is like the range for your take profit to the next level of potential resistance is going to be extremely small. So that's not going to be low probability. I mean, that's not going to be a high probability, because if you remember, this is our previous day's volume point of control, right? This is the volume point of control from the previous day. So that means at a single level, there were most transactions that were facilitated at this level. On the screen, this is Exo charts. I think it should say on top, Exo charts. It's just it's not called Exo charts sibling, by the way. It's called Exo charts. This is just the sibling window. But yeah, volume point of control, low probability. With my strategy, I usually wait 10 to 15 minutes. Mostly 10 minutes, right? After 9:40, then I'll start to trade. Because it's just really volatile. Big trades that don't really get respected during the first 10 to 15 minutes from what I've seen. So I pretty much just wait for the 10, 15 minutes to be over and then start trading. But like for now, right, this is what I see. If we come up, like I said, and you get selling absorption, then you can look to go short to the volume point of control. Because the volume point of control, you're going to get consolidated price action here. However, if we break above and we start to find acceptance, we start to build value, come back down, retest with sellers getting absorbed here, then you can look to go long and catch the imbalanced state of delivery. Once we get this, right, we should get a large expansion above the value area high. So that is what I want to see for current price action. And of course, I also want my H1 and M12 to confirm with that as well. But if you look at M12, you can see it's pretty consolidated prices at the moment. Good morning, Bella. Good morning. So let's see what the market open gives us. 29761 as targets. I mean, you can. Yes. Good morning, Tom. Yeah, I mean, I used to trade ICT, to be honest with you guys. I've been trading for 4.5 years now, right? I used to trade ICT. Let me see this level. Yeah, I can see why you see this as a liquidity level. However, you have to understand that in order for liquidity, this is the level that it has to, this is the level from how I see it, where you're going to get potential absorption here, right? Because we've had multiple attempts lower where if you look at a delta cluster, you have large negative delta here. They get absorbed. They don't get rewarded with lower price action. It's the same thing here. These aggressive sellers get absorbed. So when price comes back into this level, I would anticipate for any absorption first. There's a lot of buying supply at this level that you have to break. Yeah, I started with ICT, SMC. Back in, I first discovered trading when Doge was happening. If Doge meme coin and GME. No, GMC. No, GME. Wait, hold on. GameStop. Yeah, GME. Yeah, so that was when I first discovered trading, but I was still in school then. And then I didn't trade for like 1.5 years. And then I started to focus heavily into trading with baby pips, found out about SMC, smart money concepts, ICT. I did see good results of it, right? Like at the end of last year, I'd done over 5 figures with CFDs, trading funding pips and fivers. with ICT concepts, but I always wanted to figure out more. I always wanted to see why price was moving in specific direction, and that's why I got onto order flow. Why the M12? The M12 is just personal preference. So it goes back to how I was trading earlier before I found out about order flow. The M12 just works a bit better than M15 from what I've seen. There's no, to be honest, I don't have a logical, I don't have a technical explanation for you guys. It's just from what I've seen. Like when you're looking at swing failure patterns, where you have, let me show you an example. Like stuff like this, right? Swing failure pattern where you have a swing low and then the market takes it out, closes above the swing low. I've seen it tend to work better with M12 than M15 when I was trading normal price action. So that's why I've just stuck with the M12. It's a bit more refined than the M15, but it's not too, it's still close to it. Let me just move this. I use Exo charts. Yeah. I also have heat maps up just to see where. Let me get it up. Yeah, I also have heat maps up just to see significant liquidity pools, but you don't really need it. Like, you could almost just see it from the prices. Rounded numbers, 30K, you're going to have a significant liquidity pool here. 30,000, 50, 30, 100, you're going to see large liquidity pools at these levels. But the main thing with this is you're going to want to see supply and demand. That's the main thing. Liquidity doesn't move the market. Supply and demand moves the market. ICT is your liquidity now. Yeah, I mean, ICT, learning ICT first and then learning order flow, I realized why certain concepts in ICT worked. Right? The candlestick patterns occur from a battle of orders. Once you understand the battle of orders, once you understand, for example, here, where you have aggressive selling absorption, buying initiation, stepping in, you know, these become key levels, right? And it also aligns, coincidentally, with ICT's order blocks. So yeah, any advice, I use order flow and ICT, but still not profitable. My best advice, if you're trading normal candlestick charts, if you're trading ICT, if you're trading patterns, and you want to look into order flow, or you're also doing order flow, is go both foot through the door, like in one thing. So you either go all in ICT or you go all in order flow. I haven't found much success trying to mix the two concepts together. Unless you're like, let's say, swing failure pattern, right? You get this. You could use order flow to look for absorption here, but it's a bit iffy, right? The whole point with order flow is you're getting that confirmation before you have all of the market structure break, market structure shift, and so on, changes to delivery. So let's set the markets up. See what we're currently getting. So this is VWAP, right? The indicators I have, this is VWAP, composite profile. This is 30 minutes delta profile. On the right is the volume profile of the current days. Bottom, cumulative volume delta. Below is the footprint bar statistics, right? I mainly look at, like, it seems like there's a lot of indicators, but all of these order flow tools, they just show the same thing in a different angle. All I'm looking for is balance and imbalance. You see what you get. Like, you see here, we're starting to get aggressive buyers stepping in at these levels. So this becomes, you know, a potential level. Like I said, if we break above here and we start to find acceptance and we get a retest with selling absorption, that is your confirmation where you could look to go long here. Right? Like this. And then target the highs. PBD, I believe that's Tom's strategy, right? Is that the one you're talking about? I ideally want to see us break above VWAP. Hold on, this is broken. Let me try to reload this. Okay, never mind. We are above VWAP. Now, it's currently 9:36. Like the way I trade is super simple. OBM high, OBM low, passive protection levels. We break above, retest, selling absorption, go long. If we come up to the range high and you get buying absorption, short to the opposing range low. If you come to the range low and you get selling absorption, long to the opposing range high. So as you can see here, we broke above the value area high and we couldn't find acceptance above here. Right, I'm not looking to go long straight off the breakout. That's going to be low probability. I want us to break above. Aggressive sellers and sellers in general try to step back in, but they don't get rewarded with lower price action and see that confirmation with absorption, with initiation before going long. Right? I'm not going to enter straight away on the breakout. Is this deep chart? No, this is extra charts. Extra charts, guys. In terms of PBD, I don't use that, no. But the way I look at it is similar, right? Because I believe with P, right, this is just where you build value, right? So you're looking for higher price action in terms of volume. Low volume nodes here, high volume node starts to build in the form of a P shape, and you're looking to play this range. So you either go long from the range low if you get rejection, or you play a break and retest to an imbalanced high. I don't trade that specifically, but the way I view it is somewhat similar anyway, because I'm just looking at where volume is being built. I'm just looking for balanced ranges. Just like that. Right, so this is where price starts to become low probability. Right, let me remove all of these lines for now. Remember, the blue lines are my previous day's value area. This is my value area high, volume point of control, and this is my value area low. If we fail to find acceptance above here, like how price is currently doing now, right, and we come back into inside the value area, there's a good chance we're going to just consolidate around this level, especially as it approaches volume point of control. Now this is where my new range would be. This range high. And then this range low. Right, the reason why this is a range low, I trade NQ. I mainly trade NQ, yeah. But the reason why this is a low is because look at this. Large aggressive selling, but they don't get rewarded with lower price action. Whoever was on the opposing side is a passive buyer. There is more supply than this aggressive selling demand. Hence why the market was unable to move lower. Because the market works like an auction, right? It will only go higher if there is outstanding demand than supply, because that is where it could facilitate transactions from the aggressive participant. Once you market execute, you can't pull back that order. So if you market execute and there isn't enough supply, the market is going to move until there's enough supply to facilitate your market execution. So when you have this is a clear passive protection level. When price comes back into it, passive buyers are going to clearly protect this level, and you would anticipate for buyers to step back in, and this is where you could look to go long. And yeah, it's the same thing here. You have large aggressive buying, right? If you look at my time frame chart, you have large aggressive buying at around this level, but the market does not reward it with higher prices. So these aggressive buyers are trapped. Anything in between here now is going to be low probability. This isn't something you really want to entertain. Let me see this. Okay, until this happens. And now you're looking to see. All right, there's nothing here for my confirmation. I think buyers are definitely more aggressive today. We just have to see if they are able to find acceptance above our value area high or not. Right, like if you look at M12, large aggressive buyers, all of these aggressive sellers were all absorbed. Well, they're currently being absorbed. We still have to wait for the candle closure, which will close in approximately 6.5 minutes or 7 minutes. We'll see how this candle closes. But you can look at the M12, right? Like aggressive buyers are clearly in control here, and they're clearly being rewarded with higher price action. Anytime you have these aggressive sellers trying to step back in the form of negative delta, which by the way means that at this level, there was more aggressive selling than aggressive buyers. So aggressive sellers are clearly in control here on the aggression side, but if they're unable to push price lower, then you're looking for higher prices once you get a buying initiation. Hence why this isn't something, even though it's at the OBM high, I wouldn't really want to short this. Why was the short with 114 trapped buyers? It's not something I look for. Like I ideally want to see, for my confirmation, I want to see this candle close bearish. So if 114 happened at this candle and 95 happened within this candle, then I would look to go short there because that's seeing immediate rejection. Like on a higher time frame, this could be a bearish candle, but I want to keep everything consistent. So on the 80 range, I want to see these aggressive buyers happen within a bearish candle because that is showing you immediate rejection within the single candle, and it just makes a higher probability for me. By the way, the way I trade as well, in terms of take profit and stop loss, is going to be different with prop firms and personal. So when I enter, you're going to see me enter with like 2 positions at once. One is going to be more tighter, and one is going to be less tight. Yeah, I believe deep charts use... Oh, it's George. All right. Yeah, deep charts, from what we've seen, it has different data compared to extra charts and the way it's portrayed. Probably because Rhythmic and DX feed. Retest here. If the secondary candle closes bullish, then I will look to entertain this and go potentially long. See how this candle closes. Right, nothing there. No confirmation. Right, I always want to see 2 candles as a confirmation, right? Absorption, and then the secondary candle closes bullish, which shows initiation. It doesn't necessarily have to be confirmed with a bullish big trade. It just has to close bullish. That is my entry. That is the basic entry. Now I wouldn't play off of here. I want to see a new setup form. See where we enter from here. Looks like buyers are struggling here. So now longs become lower probability, right? Because you had this aggressive buying that didn't get rewarded. So even if you go long now, this is your next resistance level. This is where you're going to get some sort of a protection. Let me just open up key maps real quick as well. Zoom out, guys. Like, this isn't... It's not the best price action at the moment. I am favoring bullish price action still, though. Look at how this candle's closing. Should close in 1 minute 30. If it closes like this, it's going to be very high probability for continued higher prices. Cumulative volume delta has slightly died out as well. So that's not good. Ranging price action. Damn, 122 people watching the stream at the moment. How's everyone doing? How is everyone doing? I didn't even realize how many people was watching the stream. Hope you guys are all doing well. Midweek, going into August. Right, like, look at this. Aggressive buying. Price isn't really moving, you know? You would expect it's to be anticipated. After we've broken above the value area high, there is going to be a large battle order, right? Sellers are going to try and bring us back inside the value area. Aggressive buyers, if they're more aggressive, they're going to try and break out and transition into a state of imbalance. Yeah, it has. I mean, dude, honestly, the past since Thursday, we've just been trending higher. We've honestly just been trending higher. You see what I mean? We come up into this range high, and look at what you get. Large aggressive buyers in the form of 30 buying contracts, 51 buying contracts. They don't get rewarded. So whoever is here is clearly protecting this level. This is proof to you. Like, I don't know what more you guys want. This is proof. You have 79 buying contracts. They didn't get rewarded. This becomes a passive protection level. We come back up, and it's the same thing that's happening, right? Large aggressive buying that don't get rewarded. However, buyers do seem more in control, right? They do seem more in control because of this M12. Look at how we closed here. Heavily bullish. All of these aggressive sellers were trapped. They got absorbed. And we come up. We have aggressive selling here, right? We do have aggressive selling here as well. And they're not getting rewarded. So we're getting a battle order here. But I still think longs are going to be much better. See what we get. If we break above here, boom. Hopefully. Yeah. Okay, so now clearly this level has been protected. Yeah, the July Open does look nice. Definitely does look nice, yeah. We're around 500 points away. 400 points now. That's definitely going to be a target, for sure. Right. So this is still my range low. This is still my range high. What is this? Whoa, random line. What the hell is this? Let me reload. Okay. Whatever is happening with exo charts, I have no idea what this is. Oh, never mind. Aggressive buying. This is like I said, this is still my range low. This is my range high. We are playing above the value area high. So I would look for higher prices. If we are finding acceptance here, which we are, right? Volume is currently being built here. So I would look for higher prices. I wouldn't really want to... The only way I would short here is if we break below this internal level, which is what we have had. And you've had aggressive buying absorption somewhere within these candles. But that doesn't look like it's going to happen. I haven't seen any yet. And then you could take like a quick short to this low over here. Oops. Not that low. This one. Value area high. All right, this is going to be a pretty significant level to play off. See what we get. What is everyone's thoughts today? What is everyone's thoughts? Curious to hear. Large aggressive sellers not getting rewarded right this level. I think we're going to come down into this value area high. Right, it doesn't look like buyers are losing steam here. Could set up for a mean reversion play. Mm-hmm. $930. Let's draw out the volume profile. Hold on. See what we have with the dynamic volume profile. All right, so this volume profile currently, when you're looking at it from the 9:30 open, so far this session is a D shape, right? Like a D shape, which means it's pretty fairly distributed. There's no clear one-sided direction at the moment. Could attempt a short here. Hold on. Where's my executions? See how it plays out. Don't want to... This is going to be something... This is going to be a potential barrier here. If we are going to go short. Yeah, nothing there. 9. Yeah, looks like we've just rejected again. Do I have a YouTube channel? Yes, I do. I believe my @ is under my face cam. You could just use that. Search me up. How did I start learning trading? I started learning with the typical route, baby pips. And then I went into SMC, ICT, and then eventually transitioned to order flow and auction market theory. That's how I learned it. And yeah, I've been trading for 4.5 years now. 4.5. I'm pretty young, to be honest. I like to think. I just graduated uni a couple months ago, studying economics with accounting, and now I trade full time. Let's see what we get here. One minute. Thank you very much. See, like today might just be a no trade day. Today might actually just be a no trade day. It's a very, very clumsy, very dirty price action. Just gonna remove this line, remove this line for now. Right. Anytime you have a lot of levels on your charts and it starts to get pretty consolidated, starts to get confusing, just remove the internal levels, right? Always be aware of your external ranges. External range low, external range high. How did I decide on trading full time? What do you mean? I mean, I've never, to be honest, I've never worked a proper job. I don't think I've ever worked a job. I just got really lucky to discover trading when I was around 17, 18? No, it was 17. Yeah, I discovered trading when I was 17. And then I started trading, like looking into it properly at 18. And then from there, I've just been trading by myself. And then started seeing good results. And now I'm able to do it full time. Break and retest of the internal 76 if we break value error high and target OBM low. 76. Around here. I wouldn't take a break and retest there. Yeah. The reason why is because you guys, anytime you take a trade, anytime you take any positions, you always want to leave enough space to the next resistance or support level for your take profit. If you take a break and retest here, like you have a 58, 60, you have a 10-point range until the value area high. And this value area high isn't even like a single level. It's going to be a range, right? It's just a general level. So there could be passive protection here, passive protection like anywhere, around like 20, 30 range here. It's not an exact level. Right, this is the current range we're playing in. Sellers try to become more aggressive, but they don't get rewarded with lower prices. And now, this is the range. Range high, range low. Above the value area high, so you would be favoring for bullish price action. This is also an internal level. If we break above and you get a retest, you could go long to the opposing high. But like I said, the range isn't going to be that high. Show the IVB model. Unfortunately, I do not trade the IVB model. Yeah, I don't trade with the IVB model. Trying to remember what IVB model is. I believe it's maybe Pavlovic. Pavlovic trades it. I think I've watched a video of his once regarding the IVB model. I think it's the first 10-15 minutes range or something. Correct me if I'm wrong, but anyways, yeah, I don't trade it. No, I don't trade IVB model. So I to be honest, I can't show you yet through the IVB model. I do trade ranges, but not IVB. Yeah, IVB is similar to opening range break, from what I remember. Okay, so 10 a.m. open now, still no trades, right? Like, you're not going to get anything here. No trade is a trade. Do I trade with prop firms? Yes, I do. I trade with both personal and prop firms. So what I used to do is I used to have personal used to be my main account, and then all the prop firms would just be copy traded to my personal. But I figured that the way I trade personal isn't as optimal as for prop firms. Because prop firms, you really want to trade a strategy that reduces your risk of ruin. And that, generally speaking, is going to be a high win rate strategy, high win rate, low risk to reward. Let me see what's this happening. Yeah, nothing's happening. So as I was saying, that is generally going to be a high win rate, low risk to reward strategy, in my opinion, because you have the max drawdown, you have the trailing drawdown. So you want to reduce your risk of ruin as much as possible by either having a higher win rate or reducing your risk. Reducing your risk isn't really good for prop firms, because at the end of the day, it's a different business model that offers a lot of leverage. So you want to really spend the least time trading evaluations and just farming as much payouts as possible. So hence why higher win rate, low risk to reward, because the chances of you going on a losing streak that blows your account is going to be significantly less, right? So, and the way I traded personal was pretty much a low mid win rate and a high risk to reward. So it didn't really suit prop firms. So now I just trade it separately. I trade two types of strategies separately at the same time. So as you can see here, we've come back into the value area high. And this is what I said, right? Break, retest, you don't really want to play this because the distance to the value area high is going to be pretty insignificant. It's pretty small. This would be a much better trade. If you get a break and then retest the value area high, then you can look to go short to the opposing OBM low. No rush, guys. It's only been 30 minutes of the session. Has anyone taken any trades so far? Interested to hear what you saw and how you took it. I'm a scalper. Yeah. So I scalp. That's the main thing I do during New York session. I also swing trade as well. But I'm not much of an intraday. Like my average trading duration per position is around 2 to 15 minutes. It's very rarely over 15 minutes. I'm not looking to capitalize on the daily expansion like a lot of traders. I mainly just have my ranges. I'm trading from range to range, trading the break of the range or trading the range low and the range high. Here, I wouldn't look to go long because your next level of resistance is the value area high. That's why, this is why I say when you're inside the value area, it sort of becomes low probability. If you look at yesterday, even though it was a small grind higher, this was much more favorable condition, right? Much more favorable. Even though you've had some consolidations here, when you get a break above, you get that large expansion. Right? Break above the range high. So this is where your range is. Break above, large expansion. Same thing here. You just have large expansion plays. These were much more favorable conditions than what you're currently seeing right now. Right? Because not only are we in a pretty consolidated price action, there's also significant levels in between. So it's not as simple as just catching the range low to the range high and catching the range high to the range low. You have to account for what is here. You see, if you get a break and retest here, I'll look to go long. I took a trade to short side from the resistance on top. Yeah, I mean, shorts here were nice. They were nice. In hindsight, they were nice. It was just nothing was in my plan. Right, so now we're starting to come into this level. If sellers get absorbed there, I'm going to go long, guys. I'm going to go long. No absorption yet. And we break below, right? You do have large aggressive selling. So if this candle, if the next candle closes bullish, see what we get. I'm going to attempt a long if this candle closes bullish. Nothing there. Right, you see how I have clear parameters. You're not entering straight off the absorption. Absorption doesn't move the market. Absorption just stalls the market. Initiation is what actually moves the market. Now there's nothing because where we had that absorption level, it's been broken. So it could go off without me. I don't really care. Yes, hello Pavlovic. Pavlovic. Welcome, welcome. Have the goat indeed. Have the goat indeed. Volume profile. Okay, look at it, guys. Dynamic volume profile, D shape. Absolute D shape. Very fairly distributed prices here. But for those who have just joined, I have two charts. My range chart is the main chart. It is the one on the right. And my secondary chart is the 30-second chart on the left. That is what I am using as my range chart is for analysis. The left one is because exit chart is broken. Right. So the big trades, they don't show on the range charts, right? A lot of them, they don't show. For example, here, you have a large aggressive seller at 31. It doesn't show on a range chart. That is why I'm using the time frame chart as well. Right. So if you're new here and you're looking for trading journals, TradeZella, CF20 code. Prop firms, Hollow Prime, CF, 20% off code. Apex Trader Funding, and you get 90% off with the code CF. Deep Charts, 30% off with the code CF. And Market AI, code CF for 20% off. I might have to switch to Deep Charts myself, to be honest, guys. I might actually have to switch to Deep Charts myself and use code CF for 30% off. Exit Charts isn't doing me justice right now with these bugs. It is a good platform, though, to be honest. It is a good platform, but some bugs are just a bit annoying. All right, so as you can see here, right, this would have been a nice trade if you had selling absorption within this candle. We got selling absorption in the previous candle, so there's no trades there. But if you had this is the ideal trade for me. Absorption, initiation. And you could look to go long here. Right, stop loss below there and continue higher. But there's no confirmation. Please show how to change color of that volume profile on the right side. I have just one color. I want two. Are you talking about this one? I'm not sure if you can see my settings. Let me try show my settings. One second, Luca. I will show my settings. All right, can you see this window? Okay. Composite profile, right. And this is what you want to have switched on. Volume profile, and then the value area. Right, value area here. I mean, these are all my settings, right? You could just copy it. This is what I have. So yeah. Let me just share. Oops. No worries, Luca. Retest, no tracer for me. In terms of everything here, there's not much, guys. I'll be honest. There's just not much today. Right. You have this level. I mean, this was before 10-15 minutes, so it's not in my plan anyway. And then when you come up to here, you get this range low, range high, retest. Looking back, mechanically speaking, this would have been a nice short. This would have been a nice short in hindsight, but I was looking for higher price action, so I didn't take this. And then, yeah. And then from there was just nothing. This happened off a random level, and now we're just ranging pretty much. Oh, let's see what we get here. See if we can close bullish here. Okay, doesn't look like these buys are getting rewarded. Yeah, okay. Nothing there. Seems like huge absorption of sellers on ES. Let me see. Dude, to be honest, ES looks as dog shit as NQ. I'm sure there is absorption like there is on ES as well, on NQ, but there's just, yeah, there's nothing here on ES at the moment. Let me look at this. Yeah, like the 3 minute is just ugly. 3 minute on NQ is also ugly. These are the types of scenarios you don't really want to play out. To really entertain anything, right? Like you guys have to remember, we're approaching August. The way the market is moving currently for August isn't even natural anyway. Like this isn't normal. Getting massive pumps at peak summer. A lot of daily highs from free. Yeah, like as discussed from the start of this stream, there is a lot of daily highs. This is a balanced area. Like this range over here, extremely balanced. Even though value area is being built higher, we haven't broken above this balanced range yet. So there's a good chance we just consolidate within this range. And that is why you're getting the volume built around here, right? If you look at a composite profile, volume is being built here. And, you know, it's very likely that a volume point of control could just shift upwards at this level, right? The market found balance here. The market found value. Both buyers and sellers were satisfied at this level, at this range. Anytime we've broken above, aggressive sellers, passive sellers absorbed, aggressive sellers initiate lower. Anytime we break below, passive buyers absorbed, initiate, and aggressive buyers initiate higher, right? They were protecting this level very well. So when you come back, you're looking for the same thing. You're going to anticipate for the same thing. But yeah. Hello, that is Don. Welcome to chat. Welcome to this live stream. If you guys want to gamble, do this. Right? No, I'm joking. It's not really a gamble. But yeah, like it wouldn't. it's not a good trade anyway. Cumulative volume delta is just flat at the moment. There's no clear control. This is the range. This is an immediate range. This high is protected. This low is protected at the value area high. Also interested in this level and more. Right, so when price is like this, when we've had multiple... So the level I was interested in was this retest, and I wanted to look for absorption. But when price has multiple retests at the internal level and it's not really moving, then the level doesn't really... I wouldn't be interested in looking for any trades anymore, because that means aggressive buyers were unable to hold control. Aggressive buyers were unable to step in and initiate price higher. Right, like, you see this? Anytime we try to break above, whatever is protecting this level is just absorbing it, and we continue lower. Right, the best trades come when price just shoots off. So this level isn't of importance to me anymore. It can run higher. I don't really care. This is the range I'm looking at. Range high, range low. This is still my range low. And the value area high is my internal level. And this is the range we're currently playing in. See, dynamic volume profile, very, very balanced. Very balanced prices. So you want to fade the lows and fade the highs. But like I said, because of where we are currently playing, like if there wasn't a value area high here, then it would have been high probability to fade the lows and so on, right? But because you have a value area high here, even though in hindsight we did break above, if you was to enter here, the next level resistance is like 10 points. So it's not high probability. The highest probability trades will always come when you leave a lot of distance to the next level of support resistance for your take profit. See, just playing at the volume point of control for the session. Right, this is the dynamic profile, cumulative dynamic profile for the entire day. So since market open today. Very boring price action. Ugh. Not a good first impression, lads. Not a good first impression at all for my first stream. The market decides to shit itself. Market decides to shit itself. You know, in an ideal world, in an extremely ideal world, we break above this level, retest, sellers absorbed, enter, look to go long, target, you know, 30, 100, 30,200, 30,300. Go for over 5R, call it a day. First stream, bang. But yeah, like, this is the market, right? This is the truth with the market. You're not going to get good trades every single day. You're not going to get good opportunities every single day. And that's the truth of it. Like, even the best traders you see, they're not going to be trading every day. They definitely won't be trading every day. No trade is a trade. You don't have to... You guys have to understand, especially when you're new, and this is the problem I had a lot when I first started trading. I thought the more trades I took, the richer I was going to get. The more rich I was going to get, the quicker I was going to become a millionaire overnight. But that doesn't happen. Because in trading, the more trades you take, the more exposed you are to risk. At the end of the day, you're not a trader, you're a risk manager. You want to reduce your exposure to risk as much as possible. I'd rather see you not taking trade and lose one. I mean, dude, taking losses in trading is normal. It's very normal. It shouldn't be frowned upon. You need to take losses to take wins. That's just the truth. No one has a 100% win rate. No one has that. Where am I from? I am well, not originally. I was born and bred in London, United of Kingdom, United of the Greatest Kingdom. No, I'm joking. But yeah, United Kingdom. My parents are from Vietnam, but I was born here. I was born in London, went to school in London, grew up in London. And yeah, still living in London. Maybe I should move to a different country soon. It took me. So this strategy isn't like a completely new strategy. It was more so just a refinement, a constant refinement of what I was trading previously. Because like I said, I used to trade ICT, I used to trade SMC. And you know, after trading for so long, you do see the patterns, you do build market intuition and market discretion. And this just, you know, it occurred to me that the market moves in ranges. It moves from a balanced state of delivery to an imbalanced state of delivery. That's just how the market moves, because it wants to always find the most optimal condition to facilitate as many transactions as possible. The market works as an auction. So, but with order flow, I think order flow has been over 9 months now. Yeah, that was when I started to incorporate. That was when I looked deeper into order flow and auction market theory to really solidify what I was seeing. In TradingView, we can trade your style. TradingView, you actually can. Yeah, TradingView you can, because they also have order flow, delta clusters and stuff as well. However, the data they get is a bit funky. From when it was first introduced, that was what I heard. The data isn't as accurate. They have a different way of calculating it as well. So you can trade it, but I would heavily test it, and I would still recommend using a specialized order flow platform. Especially deep charts, use code CF, 30% off, right? Or you could use extra charts and deal with bugs that they haven't fixed yet. Move to... I've actually never been America. I'm planning to go New York for my 22nd birthday this November. But we'll see. I've actually never been America. Let's see this. Right, there was no short here. Kind of come below here. Right, it's very... Let's see what we get here. I wouldn't take a long here, even though it's at the range low. If you look at the M12, you know, it's not the best, guys. Not the best. Like, this isn't something you want to go long on. Lots of peeps. What is your minimum big trade size? This one is 30, I believe. Let me double check. 30, yeah. 30 big trades. But you have to also be careful with... I mean, not be careful, but if you're using a different platform, they will calculate it differently. I know Atas, there's a chance to... mechanically speaking, this would be a setup here, by the way, guys. And then you can look to target the value area high. But discretionarily speaking, I'm not taking this, because look at the M12. There's a good chance we break below this low. And also, even if you take this, it's not going to be as high probability. Well, because you're approaching the value area high. Lots of people. But yeah, as I was saying, with Atus, the way they calculated big trades, you could also do cumulative. But I believe extra charts is singular. Don't feel bad, because basically it's saying I've learned a lot this morning. Amazing stuff, 041065A. I do appreciate it. Do you stream daily on this channel, or do you have a separate channel? No, I currently don't stream daily on... I mean, this is my first ever stream on YouTube, to be honest with you guys. If it goes well, then I will stream more regularly with Chart Fanatics. I don't mind. It's this motive wave, but yeah, I do have a separate channel. It's this motive wave. No, this is extra charts. Extra charts. interest. I will be in New York for Macy's parade. Oh, dude, honestly, I have no clue what Macy's parade is. I might have to search out for you. I mean, not for you, for me. Thanksgiving takes place on... Oh, it's a bank holiday? This ain't a bank holiday. November 26th. No, this is a... There's a marathon, isn't it? It's Thanksgiving Day in US. Oh, another day of bank holiday. Another bank holiday. No trading, lads. Sorry. Volume profile. Yeah, volume profile works well on TradingView. I've tested it. Oh, another US holiday. Another early closure for US equities. Thank you, Luca. Mick Elliott Sim, thank you. Right, you see what I mean here, guys? If there was no value area, right, I've said it like 10 times. If there was no value area here, like imagine this was in here, this would be a good trade. There's no resistance. But because there's a resistance level, we gain that consolidation. They are slacking with their holidays. They are slacking. Zooming out. God damn. Absolute shithole. Yeah, 1-to-1 would have worked here. That's nice. Yeah, 1-to-1 would have worked off of this resolution. I mean, like I said, guys, mechanically speaking, this is a setup. Right? That's why 1-to-1 works. But I want to... This would have been my target. Right? This would have been my target. But this level is just... with VWAP as well, not good at all. If you look at M12, okay. If you look at M12, right? Yeah, just meh. Cumulative volume delta is heavily negative as well. We are going lower. Aggressive sellers are in control. I think it's only a matter of time where we break below this level. But yeah, that is good that you got the 1-to-1. Like with prop firms, I take 1-to-1s anyway. High win rate, low risk to reward works the best for prop firms. Yeah, man, 15-minute does look like shit. In fact, I think shit actually looks better than 15 minutes. I think shit actually does look better than what we're currently seeing on the 15-minute, you know? But like I said, right? I literally called this at the start of the session, at the start of the stream. You're going to anticipate a balanced price action, a balanced range, because we're coming inside a balanced range. Right, you see that? We get our retracement. We don't really get a move higher. It's no good. It's no good. This is no good, guys. Literally. Trump is probably seeing this and he's repairing his tweet right now. He's probably repairing a tweet right now. You can't even go... I wouldn't even go short here, guys. I genuinely wouldn't even go short here. Right? Because if you go short here... Okay, let's say you get a break and retest. You're coming into a volume point of control. The market is going to consolidate at this volume point of control. Like, nothing here is good. Nothing here is good. No, not a signal, not a signal. Like it can play out for all I care, but volume point of control is a no-go zone for me. No-go zone. Remember, guys, whatever I do is not financial advice. It's just how I trade. It's just how I think. It's just what I'm thinking right now. Right, like this isn't, it's nothing there. See how we reject him from there? Oh, yeah. Trump dumping the market. This would be a good time for, for them to close the strait again. Strait of Hormuz. Close it forever. Yeah, I personally wouldn't go short here. We need to wait for another range to be created. Right. This is my ideal scenario. Break below volume point control. Get some sort of a range high. Create a range low. Break below. Continue lower. That would. Right, you see a lot of aggressive sellers starting to get absorbed out of the volume point control. It's very, but this isn't one-sided direction. You're not going to get one-sided direction at the volume point of control. It's very two-sided. This was the single level where the most volume was transacted, was facilitated. I could almost bet we're going to consolidate around here. And if you don't, and I'm wrong, then you guys all have to use code CF. For deep charts, Apex, Holoprime, Market, AI, and CF20 for TradeZella. I am still favoring bearish price action at the moment. The reason why I say that is because the reason why I say it's going to consolidate is because it's the prior day's volume point of control. Because the single level is the single level where the most transactions were facilitated. When you have a level where the most transactions were facilitated, that means both buyers and sellers were satisfied at that level, right? They were satisfied, hence why they were able to fulfill those number of transactions. So when price comes back and revisits that level, you're going to expect for them to find balance again, right? You're going to anticipate for them to seek fair value again, right? Don't be fooled by this, by the way. Like, even though we're rejecting from the volume point of control, more times than not, it's not going to. And there's still a good chance come back and still consolidate. But yeah, that's why I didn't take a short here, right? If I took a short, it would have been around here. And I probably would have been break even now anyway. Right here, like I said, the distance to the next level of support is extremely low. Hello, partner Grunge 3904. Did you take any trades today? No, I did not. I did not. Nothing to trade here. Nothing to trade at all. Let's see what I have. This range high. And then, so this is now my range high. I would wait for a range low to form. I'm not going to use the volume point of control to be a low volume area today. What do you mean? As in here? It's not a low volume area. I mean, if you're looking at the day's dynamic profile, then of course it's, this is low volume, low volume, because we haven't had much transactions here. But when you come back, you would expect for transactions to start taking place. And for buyers and sellers to both find satisfaction at this level. Right, you see how we not gained that much movement? Like, very, very ugly. Ideally want price to come back and play around here just to prove my point. Right, like how he's doing right now. See, that's why I don't use them as key levels to look for rejections. You don't get movement higher. It's very soaked. Any movement you get is quickly absorbed. What the 12M looks like. I'm still leaning bearish at the moment, just from the M12. Holy! Ugh. See what it looks like on M3. Free M. Not much, not much. Just playing within this massive range. See what we could get here. See what I mean? Very two-sided price action. Aggressive sellers tried to break out volume point of control, absorbed, come back in. Aggressive buyers tried to break above the volume point of control, absorbed, come back in. Super consolidated. Like with trading, if you're unprofitable, if you're a break-even trader, focus on taking less losses. And naturally, you're going to make money. To get that desk tread. Dude, I was thinking of getting a standing desk. I was thinking of getting a standing desk. I don't know. I need to see. Does my back look bad in this? I promise you, I'm not dying. Hold on. What does my back look like? Oh. Wait, do I look cooked? Does my neck look bad? Does my posture look bad? Oh. Dude, 90% of traders is gonna have extremely bad posture. That number actually increases to 95% when you have this price action. I'm telling you guys. Ah. There's nothing here. Please, just dump. Look at how much aggressive buying and aggressive selling you get. Like, what the fuck? See what we get. Just kind of closes. Okay, that's gone to shit. No use up there. If this candle closed bearish, I would have went short. No, I'm not interested. I'm not interested in this one anymore. Looking at a laptop only. Looking at a laptop. In an ideal world, we're all trading on the beach with our phones. Trading at the beach with our phones. Executing on TradingView. That's not real trading. That is not real trading. Just screen. Yeah. I mean, I might buy another monitor. Currently I have a 49-inch ultra wide and a 32-inch ultra wide. But I don't think my MacBook could handle another 49-inch ultra wide. I need to like get a Mac Studio or Mac Mini. Might have to invest into another screen. You see what I mean, guys? You see what I mean? Nothing. Just consolidated. Right, volume point of control consolidated. Nothing in the market is random, right? Nothing in the market is ever random. The market moves this way because previously it moved this way. Previously it found balance. Previously the most transactions were facilitated at this level. So the market is going to remember that. It all runs on supply and demand. It all runs on basic auction. Basic auction market theory. So now this is the range. If we break below here, retest, absorption, short. Absorption and initiation. Not interested in longs anymore. There's not even that much liquidity. There's no liquidity pools on the heat maps. Much. Colors. Has anyone taken any further trades today? Anything else? Like, this is choppy, bro. This is absolutely choppy. Getting chopped to the tits. Trading on the beach, make money from home. Millionaire overnight. Dude, 3 years ago, the marketing wasn't even with a laptop. It was with your phone. Like, they were literally just trading on their phone. Easy millionaire. Click a couple buttons. Everyone's rich overnight. Look, guys, look, I just made money. This is so ugly. The idea is still the same here, guys. Idea is still the same. If we break below this level, then I'm going to go short on retest, absorption, initiation. What's your opinion on the future of AI in retail trading? Dun, 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 dun. To be honest, I have no clue. Like, I don't think it'll matter. Yeah, like I don't think it'll have much effects. There's already AI in trading. The market isn't going to move any differently. It's all just like that's the beauty with order flow. That's the beauty with being able to view how many contracts are being placed at a specific time. Because regardless of whoever is participating, whoever is trading, you're going to see that order, right? Regardless if it's a robot or a human or flipping King Kong himself. Bring King Kong. But yeah, regardless of whoever is trading, you could see like how they're going to have to execute. They're going to have to place a specific number of contracts. And with order flow, you're able to see that supply and demand. That is what moves the market. You've seen it here today, right? If there's a lot of aggressive selling, there's nothing. If there's a lot of aggressive selling and the market doesn't move lower, there's more supply than demand. So, and when aggressive buying steps in, you go higher. Initiation. I took one a little before 8:45. That was a decent setup. It was a loss though. 8:45. Is that 8:45 New York time, or is that what time is that? Do you where you can start trading with AI and $20? Dude, that is like don't be silly, mate. Don't be silly. That's not that will never work. $20 in trading is not going to get you anywhere. You know, the marketing they do is absolutely ridiculous. I actually feel bad because a lot of people do fall for it. Yeah. Just recapping the day, you know, distribution, fairly distributed price action for the start of the session, right? We did get some movement lower, but this was nothing. Because by the time you had a confirmation, it would have been below this low. And then this is your next support level. So no trades there. And then now we're just consolidating around volume point of control, like I said. Do you ever trade using ES as confluence? No, I don't. No, I don't. I don't like with like SMT divergences or divergences in general. The only divergence I pretty much use is time and volume. So TPO and volume profile. That's pretty much the only whatever divergence I use. No, I don't use ES as a confluence. Sometimes I look at it, right, for just to like you have the trio, right? You have YM, ES, NQ. Most of the time, there's going to be one lagging asset. So you could use, I sometimes look at that to play catch up, but I don't use it as like, if ES creates a lower low and NQ creates a higher high, then ES is going to continue higher or something like that. CST, 8:15 a.m. CST to New York. That is 9:15. 9:15? Wait, what's that? Trying to find what time you said. Oh, 8:45, so 9:45. Took a loss at 9:45. Decent setup. 9:45. Was it a long or a short? Let me check. It was a long, right? Man, the myth, the legend. The David Liu 9551. 9551. It was a long... No, there was no setup here. Let me see. Yeah, there was no setup here because when you break above this high, right, you're looking for a retest. you don't enter straight off this candle. So when you retest and you get this selling absorption, there's no secondary candle to confirm that. And then this one, there was no absorption within the candle until the second one. So that comes with a probability. So yeah, there wasn't a setup here. The only valid setup, to be honest with you guys, the only valid setup for me today was potentially this high. Mechanically speaking, that was going to be the only valid setup. Because you have, when we came back, so once we've had this level get implemented, this becomes a passive protection level. So when price comes back into it, you would expect for passive sellers to protect that level again. And that is exactly what you get here, right? Large aggressive buying, if you look at my time frame chart, large aggressive buying, no reward higher. Wait, no, it wasn't this one. It was this one. Sorry. It was this one. Yeah. Retest. Passive sellers protect that level again. Aggressive buyers are not getting rewarded. Initiation lower. Secondary candle closes bearish. And then you could look to ride the move lower. Mechanically speaking, that was a valid setup. But I obviously was looking for higher prices, especially as we've broken above the value high. And that's just where my market intuition comes into play. Of course, in hindsight, we didn't get higher prices and it pretty much just shut the fan. Let's see what we get here. Do you take into account order blocks? No, I do not. Wooden long here. No, I don't take into account any ICT concepts anymore. Like, I still see it, and you can't really help it. Order block, yeah, you can't really help it, but no, I don't specifically mark it out or look for it. See if we get a retest. These type of market conditions, you don't want to enter straight away off of the candle, off of the initial break, even though you've had buying absorption here and large aggressive selling initiation, because you're inside the value area. We're in a pretty balanced range. Waiting for a retest will always be higher probability. See what I mean? Like, we don't get absorption. I always want to see buying absorption. Yeah, I wouldn't long here either. I only want to go short. Only want to short at the moment. But we're not getting any confirmation. Do I look at YM or just NQ and EM? Well, I don't look at MES. I just look at NQ. What size are your charts? What do you mean? What size? Is it like time frame wise? This is the 80 chart, 80 range, and this is the 30 seconds. Give me a buying absorption. Give me an aggressive buyer. All right, now that's cooked. Now we're back inside the volume point of control. So yeah, doesn't look like there's going to be any more opportunities today. Right? Just a fat shame. Just a shame, really. Consolidated prices come back down. No opportunity to go short because you come into volume point of control, and then we consolidate again. Right? Look here. Anytime we try to break above, buyers get absorbed, continue lower. Sellers get absorbed, continue higher. And the market is always trying to play within the volume point of control. That's why we consolidated. Right? And this is why. And this is, you're seeing it in real time. That's exactly why we consolidated. Like, even if you get absorption here now, it wouldn't really be a high probability. All right, guys. So, my time has come to an end. It's been an absolute pleasure. Hopefully, there's more streams with me. But yeah, I really enjoyed my moment here, my stream here with Chart Fanatics. Unfortunately, we couldn't get much with price action today, but that's trading. You're not going to get opportunities every single time. But yeah, hope you guys enjoyed the rest of your day. And like always, take care, and I will see you guys whenever. Amazing. Thank you, guys. Cheers. Bye-bye.
Yo. What's up, everyone? We are back again. How's everybody doing? Come say what's up in the chat. If you are active, let me know how your trading has been today. What's up, Eric? What up, Mikelitsam? I hope I'm pronouncing your name right. Trent says -2R. Sounds like it's been a tricky day. I have been observing, watching from the sidelines. We'll cover a few things. We'll have a look at where the market ended. We'll go over that very, very shortly. As always, we will be scanning through the markets to see what the price action was like today, see what opportunities potentially presented. And we'll go from there. If you guys have chart requests, if you have specific markets you want me to have a look at, if you have questions that you want to throw my way, please feel free to throw them in the chat. We will dig into anything and everything on today's session. That's exactly how you pronounce it. Perfect. I'm always weary about names. I never feel like I get them right, but that's always a good start to the stream today. How's everybody else? How did everyone get on today? I know Trent said -2R. Anybody make some money today? Anyone blow any accounts? Anyone pass any evaluations? What up, Ricky? Hope you're good. I mean, I'm not even sure how to pronounce this. 04165A. People pick some funny usernames. It's okay, thank you. I'm short YM and it's moving slow. Yeah, I mean, like I said, we'll dig into the charts in just a second. I'll take a look, see what it's looking like. But it's, I don't know what to expect this week. NFP week, always sometimes a little bit hit and miss. Sometimes you get a little bit of action beforehand. Sometimes we tend to just wait for the NFP print itself, and then we do our expansion or move for the week. But yeah, always can be tricky ones to trade. Price action not great today. Price didn't too much, took 2 L's. Sometimes this is the game. Anyone a little off topic here? I'm sitting and waiting on moves like bump on the log, like the last trader moderator. Fair. I'll be honest with you. I have no idea what that means. But if it works for you, by all means. Anyone ever messed around with any of this? Let's see if I can get this to take the little light off it. They call this, I mean, I believe I was showing you all the Thai side. Let me show you the focus. There we go. Anyone ever tried these? So a couple of years back, yes. Whoa, I wouldn't say it removes hangovers, but it is, it works wonders at just giving you a fresh, like, breath of air. I don't know how to describe it. But they basically call it like a Thai inhaler. I think the actual word for it is yodom, I think. But I remember picking these up in Thailand some time ago, and they're super popular in Asia. Super popular. Trench says steroids. No. I think the better one would have been like, would it help me to grow my hair back? That might have been a better way to go with this. But now they're literally, you just open them up and you just smell, and it just opens up the nasal passage. It's a great way to go. It's not like they're completely legal. I'm not advocating for anything which is, you know, illegal in any way, shape, or form. But yeah, like I said, super popular in Asia. You ever go to Thailand? That's where I've seen these. That's where I picked up a few of these initially, and now I grab them off Amazon. But they are very, very addictive. Clears the sinus. Eric says our hair will never come back. Eric, I'm just glad to know that I have a bold brother in the chat. That's all it is. I always see it as a sign of, I was going to say wisdom. I don't know if that's the right way to put it. But yeah. It's a sign of experience, wisdom, right? That's what we'll focus on today. We've got a little bit of life experience. That's what I tend to focus on. Or it's what I tell myself to make myself feel better. One of the two. I was getting a nice McDonald's like M symbol going on at the top, thinning round at the crown. I figured it was time to go when that hit. It was either that or I was going to be doing a trip to Turkey. I don't know. One of the two. Hey, it's my birthday. YouTube gave me that username. I don't know. Fair enough. Fair enough. So are we 4th of October? 65? 65? Nah. There's no way. Eric says, I got the horseshoe look. Yeah. You know what? My grandparents on both sides all they rock the horseshoe. I can only presume it's what I have in store for my future. So I think that's the way I'm eventually going, which is why I just decided to embrace it. I went full bold and see where we went. But you know, I'll tell you a funny story. We'll get into the charts in a second. I thought I'd shoot some shit before we get into this. One of my good friends, I hope he's not watching this. I'm not saying anything bad anyway, but one of my good friends, about a year or so before he got married, decided that he was going to get a hair transplant. And in my eyes, again, I'm mindful we're all conscious of this in our own way, but in his eyes, His hairline was really bad. I didn't think it was that bad at all. He basically sent a picture to us in our like group chat of him in Turkey, basically shaved head, ready to get his transplant. And he was like, the craziest thing was he shaved his head and he realized that he felt like it suited him. But by that point, you've already spent the money. You're already in Turkey. You're already about to get the transplant. There's kind of no real turning back from that. So I decided I'm either going to go to Turkey or I'm going to shave my head. And when I decided to shave my head, I was in Thailand, right? I was traveling out there for a few months. And so I figured if I shave it out here, people would just presume that I was a monk. So, you know, nobody would really take the piss. So I did it. And I went down to like a short, like I basically got like a 2 all over. If you know, I presume most people are guys watching this, but guys will understand what that looked like. And it was honestly a terrible look. I should have just gone completely skin at the very start. And I rocked that, I think, for maybe 6 or 9 months, presuming it looked good. And then I just decided to go all the way. And it was the best thing I did, in all honesty. Like, you feel better when you're not trying to like hide it or cover it up with a, you know, with a type of hairstyle. Wind was like my worst enemy back then. I'll be honest with you, man. A gust of wind and it would expose everything that was going on underneath. It was a bad time, man. But honestly, it plays on your mind. So, but I agree. I'm very, I call it blessed. I don't want to like big myself up. Mechanicsum says, you're lucky to have a good head shape. I don't know what I would do with my head going bald. My head looks like a potato. You know, the problem is you never really know what it's going to look like until you shave it off. And I think that's half the fear in like shaving your head. And so I decided to try it. I've had a lot of people say like, you're very lucky to have like a good round head. Some people are not so fortunate. So I agree. I'm very lucky in some regards. But I mean, would I just prefer to have been lucky and maintained a full head of hair? For sure. For sure. You know, the wild thing is my dad has a full head of hair. He's going on in his 60s, right? My dad has a full head of hair, and that was the one gene that he did not pass down, like at all. It's wild. Mornings are the enemy for the bold style. Yeah. You know, now that I've done it, now that I've kind of embraced it, I honestly, I have to shave it every, like, I would say 2 to 3 days to keep it somewhat clean. But outside of that, I feel like it's a blessing. Not having to worry about like drying my hair, styling my hair. It's so relatively low maintenance. It's a good vibe, man. Yes, I'm 61 years old and just changed to options from buy and hold long. Fair play. Fair play. I love that like trading brings about such a diverse community. You know, interestingly enough, I was on a coaching call last night with I do like these group coaching calls. We had a new member join that was, I believe they were late 50s, I think they said. And just wanting to take a different path in life, wanting a little bit more control over their time, and venturing into, you know, trading in some way, shape or form. I don't know if they were going down the intraday route, wanted to swing trade, but it's an interesting space, man. I love seeing the diverse people that trading brings along. And it's never been more accessible. I think a blessing and a curse in some ways. We'll probably talk about that shortly. Eric says some people have hail damage. It makes showers easy. 100%. You know what? At least you bath for 10 minutes and you're done. Yeah, I agree. Like I said, there's some blessings behind it for sure. Right. Anyway, let me jump on to the charts. Let's actually have a look at what has been happening over the course of the day. We're going to go through them. We'll keep it nice and structured. We'll drop them market by market. We'll go through the watch list, see what has happened on the day. And of course, we'll keep things as clean, as transparent as possible. We'll have a look at what things were looking like yesterday, what moves we potentially got in, what things were setting up, whether we made money, lost money, and cover everything else in between. Eric says, I started at 45 and been at it for almost 2 years. Eric, you did lucky to hang on to it for as long as you did. I shaved my head at 30. When did I start? 3 years ago, I believe. So I would have been 32. 32 when I first started. Well, I mean, I was thinning long before that, but I actually shaved it 3 years ago and been bold and beautiful ever since, which is what I will call it. Other people would probably disagree, but it's what I'm going to stick with. Anyway, let's jump into the markets. Let's have a look at where things are at, what has happened today, what potential opportunities lie ahead, and we will go from there. So we'll start off. I think, I don't know if Sherry is present today. I think Sherry has been leading. I think it was Sherry or Mikelitsa, one of the two. Someone has been taking and trading Aussie Canadian. It's not my usual pair, but it's a market that we have been watching. We watched the obvious breakout that we saw yesterday to the upside. And I know for sure one of you made some money on this. I have been watching the range end high up in here. Again, very much more from a swing perspective. But what does need to be done now that we've had our daily close is to update our daily ranges to support where price is currently at. And so we would be looking at something like this. For me personally, I don't know if I would have any, like just looking from a daily chart, I don't know if I would have anything that really stands and screams out to me as a potential opportunity to want to do something here. And again, the areas and ranges that I draw up are nothing more than just reactionary zones. You can use them to frame a narrative and a bias in the market. I use them more as just areas to do some business. If we start off and look at the rejection that we had here intraday from Aussie Canadian, you could see, again, depending on how you would trade, if you had a short bias, definitely a nice place to be doing some business in there, has presented something. There was nothing really clean. If I drop down to a 5 minute again, I don't know if I would argue that there was a clean long opportunity in here. You had this bounce, but no real structural break to the upside. We simply just retested some old lows, continued on to the downside, and momentum stayed to the downside, right? We then had the breakout lower, the retest of the area, which is where I think the clean short opportunities would have come from. But like I said, an entry model is not a potential trade, right? For me, if there's no narrative or context over why you're doing this, it has far less meaning. So could you argue that there was a reaction from the zone? 100%. But would it be a valid trading opportunity in my eyes? Probably not, right? I would be concerned about these highs that we have just cleared and broken out of. What's going to be the reaction from those? Is that going to provide, a kind of a base for price to kind of bounce from? And then we could use this daily range as a pivot to get long. That could definitely be a potential scenario that we look at. But there's, like I said, there's nothing really clean here for me that makes me want to jump out of my seat and be like, you know what, this is where I kind of want to be focused on doing business going forward. So yeah, I don't know, very thin opportunities for me, at least for what I would look for here on Aussie Canadian. We'll get into some of the more major markets and see what we are looking like. And again, if you guys have some markets that you're watching, I think somebody mentioned they were trading Dow Jones. YM, I'll have a look at that very shortly. It is on my watch list. Not one that I spend a lot of time on, but 1% up on the day. I think, I don't know if Billy is present with us here today or if he is just balls deep long gold. If he's here, please come and say hello in the chat. If you're not here, of all the days that we should be talking about gold, today is probably it, my friend. Yeah, we'll have a look into this at some point. We're 4% up on the day in gold. Big moves today. So definitely something to watch for in commodities and see if there was a potential opportunity that we could have got involved in. But we'll start off, we'll keep this structured. We'll go, we'll hit Aussie next. I will keep an eye on Aussie Canadian here, tapping into this kind of first area. Be interesting to see how the market reacts. Again, not looking at this as a potential trading opportunity per se, but framing some kind of narrative of where the market wants to go next. we're either going to get a clean break of this and hold and make fresh highs, or we're going to return back into the range. And I think if we lose this area in here, we could frame an idea to get some shorts back open to maybe look for the lower end of the range. That could be a potential target for us. But I think all reactions will really depend on how the market reacts at this price point in here. And we go from there. Aussie dollar. Very little like movement on the day so far. We even did have non-farm, like the early numbers from non-farm payroll out today. And there was just very little movement. I mean, you just look at the range presented here on Aussie comparatively to even just some of the previous day's candles, very, very small, tight, constricted range. I am very much getting the vibe that we are probably waiting for NFP before we see some movement. I don't know if there's much else on the calendar that is really jumping out at me from tomorrow. US, we have unemployment claims early in on the US side. But like I said, just nothing that really screams out to me as a market moving opportunity aside from potentially NFP this week. If you look at where we opened the week from the gap open, we are 10 pips up on the week. If you look at, from Friday's close, maybe 27 pips. There's just been very little lackluster movement. And this is where I think you got to kind of like pick your shots, right? You got to be very picky with what you choose to trade and how you really want to get involved in the markets here. But there is just not a lot that really screams out to me as potential opportunity. If I have a look at this from an hourly perspective, I mean, we've been really testing up the highs. We've been really testing the lows here, but I just don't have strong conviction on a potential direction from here, which is why I haven't framed a potential trade off of this. Gun to my head, I like the idea of long more than short. I just don't see a really clean narrative to want to get long. But if you had to say, what direction are you choosing? I don't know. I just don't, there's nothing that screams out at me. That's a big factor for what I look for. Does the market scream out to me as something that I want to get involved in? And if I compare this to like the trade that I was in, and again, we'll talk about this shortly, dollar Canadian, there's just not a lot that screams out to me to want to get involved in this market. McKennett says I only trade NASDAQ, maybe the other guy. Yeah, my apologies. Definitely there was somebody that was trading Aussie Canadian. I think it was Sherry off the top of my head. But yeah, just Aussie just doesn't scream like for anything that I would specifically look for. It just doesn't scream like any clean, good opportunity that jumps out at me, at least from my perspective. I'll have a look at this on a lower time frame very shortly. I want to do a quick scan of the markets and see where things are at. But just, yeah, not a lot that jumps out at me here. Euro dollar. We actually had, we talked about trades on this yesterday. Let me drop down a time frame to see where we were at with these. So we gave some potential options in here, right? If you were taking the kind of swing or intra-week approach, you would have probably taken a small loss. This was the opportunity we talked about on Monday. Stops would have been trailed to above these highs, and you would have exited or got tapped out probably over here at some point earlier today. So you would have taken by all means, a 25, maybe a 0.5R loss, 0.6R, something like that. You would have got out with a small loss on this purely from the basis of your trailing stop. If we looked at the aggressive entries that we looked at yesterday, again, I'll pull these up on a 5-minute chart so you can look at what we were focusing on. We had this particular trade here in which we were really focusing on, again, reaction off of, I think this was a daily reaction zone in here. Yeah, daily zone. And I said, if you really wanted to be aggressive with your shorts, you could be getting in here. But for me, the cleaner, I'm a little bit more conservative with how I trade, would have been the break of this area down in here, which we never got. So if you took the aggressive entry, maybe you would have been taken out with a 1R loss, depending again on how you would have managed the position. If you picked any of the conservative options, there was no trade. The swing shorts below here, again, nothing presented for us. I'm going to take all these off for the time being, just because they are an invalid area of doing business, at least as we currently stand. What am I looking for here on Euro at the moment? In all honesty, absolutely nothing. There's just nothing that screams out to me again as a potential good opportunity that I would have been eyeing up for the day. Yes, we are. I think, again, we'll talk hypothetically here. Had I got into any of these short positions in here and I had been squeezed and tapped out, I probably would have been looking for a little bit clearer of a signal, but not from this time frame, right? From a daily perspective, I would have wanted to see a clearer idea of where I think the next best directional move is going to come from. And I don't feel like we have that at this point in time. I could probably make a case to say we should be short, and I could equally make a case to say we should be long. When I don't have conviction in a narrative or a context or a bias on the day, my immediate presumption is I kind of just want to stay flat, observe the market, wait for something obvious to present, and we go from there. But again, very lackluster day. It does very much feel like we are waiting for NFP to see what the day is going to bring for us. But as for opportunities on Euro, I've got nothing fresh to present for you guys, at least again from the higher time frame. We can go down a little bit later in the session. We'll look at some potential scalping opportunities. But as we currently stand, there's nothing that screams at me from a larger context of where I think price is going to go. Let's have a look at GJ. So coming in and testing our lower end monthly range, right? If I bring this up on a higher time frame again, just to give you context over what we have been looking at here, we've got this monthly candle here, which as of last month, we have been kind of trapped within that range. We did tap both ends of the range from either side. What will be interesting now is to see what the reaction is from here and if it presents any opportunity going forward. Now, again, difficult market in my eyes, because the nuance that I would add to this is I think it makes sense to be very much aware of the fundamental factors at play here. We've been talking about this all week. The fact that the Bank of Japan and the US has been intervening to bring some stability to the Japanese yen makes this a little bit more of a difficult market to want to trade, especially in my eyes, if you're trying to get long. Right? There is most definitely an argument to say that every time the Bank of Japan has intervened, it has led to a follow-up move to the upside. The problem is in timing the intervention. There's no prerequisite to say, look, we're going to come in at this time and start buying up the yen. They just tend to do it and to get involved, which means, especially if you're trading this in the CFD side of things, slippage is a very, very real thing. You get caught on the wrong side of a move like this. It's a very dangerous place. You look at these things from a 5-minute perspective, and you've got moves in here where you had a single 5-minute candle of almost 200 pips, right? Almost a 1% move on the currency, in 5 minutes. That in and of itself, you look at this on a 1-minute chart. Let's see what we actually moved from a 1-minute perspective here. We had some candles 100 pips, 110 pips in the space of a couple of minutes. Crazy moves, literally just insane. These are the types of moves that if you're not careful, you get slipped, you blow some accounts, you get all sorts off of that. But the move that we had drawn up is if you were going to engage in longs, you would only really want to be doing it after breaking this structural area, which we haven't even really tested yet in my eyes. We've fallen just shy of it today. Yes, we are in the larger monthly range that we have been focusing on. But to me, not enough context, narrative to want to engage in a position. If you wanted to keep with the downside momentum, was there a potential move to be had here? Potentially. You could be looking at this. I think the rejection started initially over Asia. If you wanted to look at an area to be getting long, to be getting short off the back of this, I would say that the obvious point of interest that stands out for me is probably going to be this area in here. And again, we got a little bit of hindsight. That's the downside of doing these sessions at the time of day that we are. You obviously see most of the action for the day having already played out, but it's always good to reflect on what you would have done, what you could have done, help to train that eye a little bit further. But this would have been the most obvious area for me that I'd want to see fold before I start getting involved in potential plays in the market here, right? So we've got, this for me was the last very short-term structural leg that created this last push up. Once we see this start to break down, which we saw over here, that would be your point in time to start opening and engaging in shorts, stops above the high, and then you would want to be targeting whatever targets that you are potentially looking for, whether it's significant lows or highs, whether you're getting out of fixed risk reward. The options are all there. Has provided some kind of opportunity. Again, it's very aggressive. I don't know if it's one that I would personally want to take. Again, I think I would probably want to look for something that looks like clearing this low in here. This would be my conservative shorts, conservative swing shorts. I would want to see that get broken to give me some play to the downside. And then, of course, the play would be something that looks a little bit like that. And you'd want to be targeting, some kind of swing lows in here. But it would look and shape up something like that from a, maybe an intra-week short perspective. That's what I'd be kind of looking for here. But again, I don't know if I like the idea of doing business, especially long. I think if I was going to do anything, it'd probably be short at this point in time. McKellar says, not much to work with after that bull run on all markets. I'm waiting for the waters to cool down days like these. 100% agree. I think a big part of successful trading is exactly this. It's knowing when to sit on your hands. And what you tend to get after a little bit of expansion like we've had is a little bit of consolidation. Very, very normal conditions in the market to experience. And it's the moments where you kind of want to, calm that itchy trigger finger is probably the best way to frame it. If you don't have an ability to sit on your hands and you just want to be in and out of the markets all day long, this can be a very, very dangerous place. It's very easy to make this, a little bit of a casino and to essentially, just find whatever you would potentially like. Sleeping Dolphin says, I need to get some comfy hand cushions. Fair. Yeah, whatever helps you. I personally think on some days it's just better to immediately get away from the charts and just have other things to do. A big part of, I think, what makes a lot of people successful in this game is understanding that you don't have to trade every single day. And that's always easier, I think, when you have other things going on outside of trading in and of itself. There's a lot of people that have this dream and ambition of wanting to be a full-time trader. And again, there's nothing wrong with that. But I think the moment you say to yourself that I'm only going to make all of my income exclusively from the markets, this becomes a very difficult game to play, right? You're now saying I'm putting all of my potential to make money from a source which is uncertain, which I have no control over. I don't know when the markets are going to present a clean opportunity. It might be once a day. It could be once a week. It could be once a month. Those sorts of market conditions make it very, very difficult to actually understand how to remain patient. It's very easy to force an opportunity when one really doesn't present just because you want something to happen. And that's always a little bit more of a dangerous place. So I think, and again, it's I always say it's an unpopular opinion in the space, but I genuinely think multiple sources of income is the best thing for absolutely everyone. The moment you do not need the markets to pay you anything will be the time when you can think and trade with a clear head. You don't need to force anything to happen in the markets. You can just react to what the markets are going to present. If there's no opportunities, you sit on your hands and you wait, right? And I definitely feel this a lot as a swing trader. I mentioned like a few weeks ago, I was sitting in a single trade for 4 or 5 weeks and there was nothing else going on. Market conditions sucked. That trade panned out to nothing. But just learning when there are times to put your foot on the gas and times to sit on your hands, and that's an equal part of your job. It's a skill that has to be learned and refined over time, for sure, for absolute sure. Right, cable. We have again very little going on today. We're definitely getting a reaction from kind of these daily and weekly ranges that we have had drawn up in the markets. Could you have, again, if your bias was to get short, and I'm going by the price action that we have had at the moment, could you have framed a narrative to get short off the back of this? I'm missing a range. Give me 1 second. Let me get this visible here. I would argue, and again, this goes back to a lesson that I said yesterday, and I'll talk about this. I'm going to draw this up. If, hypothetically, I was going to get short, I would say that there are 2 potential areas, depending, again, how aggressive you want it to be with your bias here, right? I would argue that the cleanest trades that stand out in my eyes, you got this one here, which, I don't know. I don't know if I would have got an entry on this one, to be honest. This is a potential point of interest that I would have been looking at. So you've got market trading up into your reaction zone. I would ideally want to see a break of this area, right? Which I don't think we had here. So I think we're going to say this would have been a no trading opportunity on this occasion, right? But then we had this further run up in here, which I would say originated from this area, which presented then looked something like this. And I would argue that actually, if you were looking for shorts, this would have been an opportunity that you would have taken, right? Stops above the high, targets to be seen, but you would have taken a 1 hour loss on that, right? Again, not my, wouldn't have been my favorite play purely from the perspective of like context of the market. But if you really had a bias to be short and you're looking at simply finding an entry to get you in alignment with that, from what I would look for, that would have been something that ticked the boxes and it would have resulted in a 1 hour loss. But again, the context, the narrative, I think is an important factor to be considering here. And without that, it's very, very difficult to I think frame an idea from. So depending on how aggressive you were here, potential opportunity, potential loss, you see where you go. Exactly. That's why I said at the opening, that's the meaning of sitting like a bump on a log. Fair. Okay. Got you. I'm with you on this one now. Yeah, I completely agree. I think, finding those moments to sit on your hands is equally important. And it's part of the job that not a lot of people talk about. And, I think it's one of the downsides of what most people consider like day trading, right? It doesn't mean there's a clean opportunity every single day, especially if you have like strict criteria that you're looking for. It doesn't mean there's going to be a good opportunity all of the time. Real estate, one home can always generate value, savings or income. Yeah, fair. I think however you choose to diversify, there's multiple ways to do it. I would go as boring to even say just having a job, a business, a side hustle, something that brings in money, something that gives you something to do. I'll tell you a very real story, right? When I started trading first in 2012, I spent the bulk of my time losing money. And when I started to have a breakthrough in my trading, I was working a regular job. I used to work in IT. It wasn't something that I necessarily enjoyed. It was just something that I was somewhat good at. And I got to a place where I started to get very unhappy with work. I just didn't want to do the 9 to 5 anymore. But for me, it was the 8 to 8, right? I did day shifts, night shifts. It was all sorts of stuff. I wasn't enjoying it. And I decided to quit my job. I won't go into the details of the backstory, but I decided to quit my job. And I decided that I needed to do something that was more meaningful for me. I was interested in the idea of coaching, which is where the idea initially came from. But I never, the thing that was always lingering in the back of my mind was I really wanted to be a full-time trader. And I started to make progress in my journey up until a certain point. The problem was that the moment I quit my job and I now had 0 sources of income, I found myself having all the worst habits in the world. I thought my job was the hindrance and that it was the thing that was keeping me from being at the charts all of the time. And actually, it was the thing that kind of kept me a little bit sane, right? It was the thing that actually, gave me some sanity behind what I did and actually not needing to force positions in the market, because I knew regardless of what the market conditions were, I was going to get paid at the end of the month. The first trading month that I had outside of a job where I closed in drawdown absolutely ruined me. And I felt like I gave myself the best possible odds. I had around 2.5 years worth of living expenses saved up. And I thought that would be a really good runway to give myself this opportunity to start full-time trading. And it ended in basically the exact same place. I struggled. When the first time I felt my account only go down at the end of the month, I really struggled with the idea of managing drawdown, coping with losses. That sent me on a little bit of a spiral, and I undid so much progress that I was making prior to this moment. And it made trading very, very difficult. And it was at that point that I realized that, number one, I needed another source of income. And number two, I needed something to actually fulfill my time. At that point, I was swing trading. And when there was no opportunities present and I found myself having nothing else to do except staring at the charts, all I would do is just sit there and create opportunities which just did not exist. And weeks like this, obviously, unless you're trading commodities, which are absolutely ripping today, it was such a difficult time to just try and keep a cool, calm head from what I was looking for. And not having a source of income was a very difficult part of that. And I talk about this very openly in the sense that one of the biggest reasons that I started a coaching business, and at the start of my journey, just to be clear, I wasn't a performance coach like I am now with traders. I started off as a life coach. I did some courses. I got some qualifications under my belt. I learned a lot about psychology through that journey. And I decided that I was going to be a life coach on the side of my trading. And that would be the thing that would keep me busy. And it grew into something that now, I specialize only in working with traders. I've moved away from life coaching. I've started focusing on performance coaching. But that side of generating an income outside of just having the markets to pay me was massive. And ironically, the more and more busier that my business got, the more successful my coaching business became, the less I needed something to happen from the markets. And in all honesty, the more process orientated that it made me. There's a lesson in that, right? There's, when we talk about the idea of detaching from the markets, being able to do it based on what you're doing outside of just chart work is so important. I truly believe, I know a lot of people talk about the idea of fear and greed and anger, all of these types of emotions, which really screw with their trading. I genuinely think one of the biggest killers in your trading is boredom. I truly believe boredom is one of the biggest performance killers. And most people don't even understand that they're experiencing boredom. They just click all these buttons because they feel like it's the right thing to do. But really, they're just driven to chase a little bit of dopamine during the day. And it's a struggle for a lot of people. You have a plan for boredom and it can genuinely improve so much of your trading. And my plan was work on my business, create a successful business. And the less I need the markets to do anything, just help me better with periods of drawdown, losses, stagnant, flat periods of time. It was always a real struggle over time. I love being a maintenance tech, but the industry lost respect for us. That literally kept an apt complex going. Remodels, repairs, knowledge, many skills. Trading looked better. Fair? You know what? The thing is, I'm never going to talk anyone away from pursuing their dream or their goal of, you know, full-time trading. I just think most people would be better off with this idea of having a balance, which is, like I said, multiple sources of income. Whether you have a job, whether you have a business, whatever it is, I think if you can create multiple streams of income, it's the best thing for everyone. So I think the more sources of income you have, the better. Real estate, a job, a business, a side hustle, long-term investing, just create as many income streams as possible. And the less and less you need, you know, the markets to pay you short-term, I think it will do you wonders in the grand scheme of things. Anyway, cable, honestly, like I said, there's not a lot that really screams out to me here. The one I do want to talk about, dollar Canadian. I don't know why my risk to reward tool keeps changing. Actually, no, that's a lie. This one is actually drawn correct. It was on my personal account. I found the risk to reward was changing. I want to talk about this trade. We spoke about this yesterday. And I talked about how I actually had a swing long position in this on my personal account that I was actually building in here. I took a more aggressive approach. In my personal account, I lost $100, right? And a lot of that loss, to be honest, was I got tapped out here, which is basically a similar place to what you're seeing in terms of my stop that we drew up yesterday. But in my personal account, I had an initial entry in here. I had an ad that I got on in the retracement in here. And then I had my final ad, which I executed live on stream yesterday with you guys, up in here, simply to scale up my position size. Now, after the market started bouncing from this area, after we got the daily close the way that it did, I decided that I wanted to trail my stops below yesterday's candle low, which I did. I moved my stop to 4030, which was basically a few pips to account for a little bit of spread below this candle low in and of itself. And as you can see, obviously, I got tapped out of that. A little bit lower on here, but the swing long that we would have initiated hypothetically on stream yesterday would have been taken out. Again, depending on how you would have managed it, I would argue that the swing long would have been taken out for a 1 hour loss. If you had been aggressive with trailing your stops and you got in after, you trailed your stops after this bounce in here, maybe you could have saved yourself some money. But in my eyes, in all honesty, I would look at this as a 1 hour loss. Nothing that I would have done differently. And even when I talk about this in the context of my swing trade, right? If I take you onto my actual, like what my trade actually looked like, it looked like this. So my average entry price was 40.36. And again, that is across 3 separate positions. Had I not added up in here, and I thought about this with a purely fear-based mindset, I could have got out of this trade with a small profit. I could have made, I think, something like $300. Maybe it was less than that. I think it may be a couple $100. Had I not wanted to add in here and simply just said, you know what, I've got 2 positions that are currently on side. I'll take my win. I'll take my small win and go from there. So some of you may prefer that idea. I come from the nature, and a lot of this, I was very heavily influenced by the likes of, like Tom Hugard. For anyone that watches him or knows of him, has read like Best Loser Wins. This is all of this ideology of like playing from strength, right? When the market is on your side, you want to squeeze. For those of you that have read Best Loser Wins, highly encourage it. Great book. Came out in, I want to say, maybe at least 4 years ago, 3 years ago, 5 years ago, something like that. It's been out for a number of years because I remember I read it quite early on. I saw someone mention it, looked super, super interesting. And it was one that I took a lot away from. And really that's what helped me to change my, it's this book. For those of you that are interested, Best Loser Wins. This is the man himself, Tom Hugard. For anyone, like I said, that hasn't heard of it, hasn't read it, I would highly, highly recommend checking it out. For me, it went up there with like the modern day trading in the zone, right? It's not as, I would say, psychological based as trading in the zone is, but the lessons that he shared, it's very modern. It's like an up-to-date version of his take on psychology and winning in the markets. And it like I said, I was swing trading already at that point, but I wasn't adding into my winners as aggressively as I do now. And I've had some phenomenal trades from really just stacking in heavy into positions where the market is proving me to be correct. You know, without that philosophy of adding when the market is showing you when you're right, it has really made up a big chunk of my gains over the space of a year. And I really generally follow that kind of 80-20 rule, which is like 80% of my money comes from probably 20% of my positions. And the problem is you never really know which position it's going to be. Like when I come up with this idea to take this long trade here in dollar Canadian, right? And I'm basing it off of the pattern that I'm seeing here. We're in a weekly area of interest. We've created this swing failure. You know, there's just a lot that is going for this. We're tapping into an area of demand from a daily perspective. There was a lot that supported the idea of a bounce, and I was looking for a simple rotation play from one weekly end to the other, much like we've been drawing up on these streams for, you know, the many weeks that we have been doing this together. But the one thing you can't anticipate is how this is going to structurally play out. I don't know if I'm going to get in here and the market is just going to go absolutely vertical and run straight to target. What I generally prefer is to see it tear up in the way that it does, because it gives me an opportunity to scale my stops. It gives me an opportunity to add into the market. And like I said, I would take this trade 100 times out of 100. So where I added into this trade and I scaled my stop loss up at the close of the day, I took my, you know, a trade that went from a potential profit of, you know, on the downside from like, I think it was a couple $100 in profit to like $100 loss. But my upside is exponentially bigger. And to me, that's what makes a lot of sense. So it's all about your risk tolerance and your risk profile to determine how you really want to manage these. But in my eyes, I would do nothing different on these occasions. You will see me time and time again. I'll talk about these as much as I can on stream when I have positions on. I'm completely flat in the markets at the moment. I don't have anything that is jumping out to me at this point in time. But you will see me do this time and time again. I will continue to add into my winners. If the market is ultimately going to go from where I think it will to the end, I want to try and be in with a heavier position size as I possibly can to make that move really count. And you could do this on any time frame that you trade, whether it's an hourly, whether it's a daily, whether it's a weekly, whether it's a 1 minute chart. This idea of adding into winners when the market is showing you that you are correct, like I said, it is an idea that has really served me well. So I have no regrets with the play. I would take this type of setup 100 times out of 100. And that's all I really want to say about it. I'm not going to sit here and say, oh, I should have done this, I should have done that. No, I followed my plan. I traded my criteria. It didn't work out on this occasion. That's just trading. That's why we use a stop loss, right? We're never going to have a strategy that wins 100% of the time. You're going to go through moments where you get chopped up in the market, whether it's a single trade, whether it's a, you know, an entire lengthy period of drawdown. That is ultimately, unfortunately, just the game. That's honestly where we are at. Risk small, win big, win right. That makes sense. 100%. That's always been my philosophy. And like I said, I'm just trying to skew the upside massively in my favor relative to the downside. If I have an opportunity to get out of a trade with a small loss, but it means exponentially adding to the upside, I'm taking that trade 100 times out of 100. So these bits of analysis come off. We are now tapping into back to the lower end weekly range. Is this presenting a possible opportunity? I'll definitely be watching this. Let me draw my zones back up here again so we can watch this on a lower time frame. If I wanted to still be long this market, this would definitely be an area that I'm looking for. And I'll keep an eye on this over the course of the stream, right? Right now, the only thing that really catches my eye, and again, it's not a screaming standout opportunity, is something that looks probably like this, where I would want to see a little bit of a shift in price action here. And this would, again, be my intraday longs above here. So I'll keep this drawn up. And again, it's an intraday play. I would want to see this play out over the course of today. But again, mindful of time of day, whether we get any opportunity from here, I do not know. We're very much fighting some downward momentum on the day. Average daily range has also been met. Could actually make for a good reason to look for mean reversion back into the range as well. But there's, like I said, there's nothing that screams out to me, at least as we currently stand. I have my plan of action for a potential long trade in here, and we see where we go. Okay. So that is dollar Canadian. Dollar yen. I mean, we talked about this, and I think we mentioned that there would have been an active trade on here to potentially get long. We have been drawing up this area of interest, which I believe is it's the monthly range low from what we have drawn up. And we are still seeing price relatively respect this area, as you can see in here, right? So this trade, in my eyes, would still very much be valid. If we get a break or a real test of these highs in here, I would move my move my stops to below that low. But otherwise, this is still very much a valid opportunity for me here. And we will see where the market takes us. But nothing really to update on here. Very much just sideways consolidative price action. I expect this is probably maybe going to be one that waits for NFP on Friday. And we go from there. Me too. I don't want it to go straight up. I want dips so I can parlay ads. My biggest win was 100R doing that. Crazy. It's actually insane. You look more realistic compared to others. Many YouTube channels have these perfect 3R traders. To me, it's not realistic just by looking at the charts. I appreciate that. One thing I've always said, I do this the same in my coaching calls. I aim to operate the exact same way on stream. I will always be transparent and honest about my journey. When I'm going through a tough patch, I'll tell you guys I'm going through a rough patch. When I'm winning, I'll tell you guys I'm winning. But I always want to keep trading as realistic as possible. And I think you have to remember, especially when it comes to the likes of social media, I think one thing we have to factor in is win rate and risk to reward are inversely correlated. I'm all open to being proven wrong, but in the now 14 years that I have been in this game, I have never seen anybody with a track record, like I'm talking a long-term track record, where they have a high risk to reward and a high win rate. I've never seen it exist. And this is why, especially for the shorter term approach, which is a lot of what I want to be talking about on stream, right? It's a part of my trading that I'm about to start exploring a lot more actively. I don't want to aim for the crazy high risk to reward, which is why you see a lot of my trades very much conservative in nature. We've had some that we've mapped out that do have some phenomenal risk to reward, but they are few and far between. What I want this to be is just focusing on small base hits, adding up over time. And I think that will give me a lot more stability to my swing trading, right? My swing trading is very much I'm focusing on those higher risk to reward opportunities. I want to see that skewed difference between average size winners and average size losers. But respectively, that does come with a relatively lower win rate. I mentioned, I think it was yesterday, somebody asked me on stream, like, what's my win rate over time? And over a large sample size, I generally sit at around 35%, which means I go through losing streaks. I have extended periods of drawdown. A normal period of drawdown for me is 1 to 3 months at a time on my swing strategy. But it's largely because I'm operating from a daily chart. And that's kind of a big factor for me. If I show you the one of the swing trades I talked to you guys about, I think it was yesterday, I was looking to be long euro from in this area in here, and I ended up getting tapped out with a loss. And I had to sit through these market conditions and throughout the entirety of this. And if you look at when, like, the time in which this elapsed, this was an entire month where this was basically like almost my only trade during that period of time. So it sucks in these moments, but it is what it is. Like, that's just the game. So I appreciate the fact that you think that this is realistic. It's always how I want to keep this. And it's what I try and focus on sharing. Like, I try and make trading as real and relatable as possible to most people, because I think social media has kind of glamorized what the space is really like. And look, don't get me wrong. You'll see me talk a lot of smack about traders on social media, and the kind of false perceptions that it gives you of what trading is like. As much as I believe that to be true, I also do believe that social media is a blessing for traders as well. We wouldn't be able to do this. We wouldn't be able to have these sorts of conversations if social media didn't exist. And that's a blessing in terms of our ability to learn, our ability to connect with each other. That's very, very difficult to find outside of having these spaces like this. So, like I said, take from that what you will. Right, before I get into equities, I do want to have a look at commodities a little, right? Gold and silver have been going absolutely nuts. Let's have a look at, what we have been looking at in here. We'll start with silver. So silver has been the outlier, the performer today. We talked about a potential swing long that we could have had yesterday. Again, exact same criteria as what we have been looking at here, which is we have a lower end monthly range, which has been drawn up in here, which if I take you back to a monthly chart will be very, very clear as to where that has been drawn from. So you can see this in here. We now go back down to a lower time frame. You can see we had a very nice sweep of lows. We had a very clean structural break in here. And once we had that, it was pretty much off to the races. And again, this is moving in a very nice tiered, relatively speaking, tiered fashion where you could be trailing stops, you could be adding size to the position, however you want to play this. But it has been a very, very nice opportunity. And we mapped out yesterday, like what we would be looking for here from at least a swing perspective is you would want to see the rotation from the low end of the monthly range to the upper end of the monthly range. And that would be the way, what you would really be looking for over time. So very, very interesting move here on silver. Is there anything intraday that I would be looking for here, right? Let's have a look. We had, I'm just going to hide this for a second just to keep things a little bit cleaner. So we had a potential range form in here, right? If I draw up what I'm looking at, which is this range and high, and this is a 4-hour chart. I know these have been good movers today, so I want to see if we had an opportunity to be long or short in here. Now, where are we at on the day? Interesting. I mean, I don't know if I would want to be chasing this long much further, purely from the perspective of average daily range, right? We've kind of met that statistically You know, a lot of markets are not going to be exceeding these, and that's something that you kind of want to be keeping in mind. I would argue that the potential trade that I would have been looking for in this area after exceeding the average daily range, if anything, I don't know if I would have wanted to have fought the momentum on the day, but if anything, maybe wanted to have been to the downside. Now, when you look at this from a 4-hour perspective, you've got average daily range being tagged at the same time that we are creating a 4-hour range in that same area. Now, does that 4-hour range actually present us with a trigger to be short? I would argue potentially yes, right? What I would potentially, I mean, it's a messy kind of setup. See, what I would be looking at here is this is the range that was created. This would be the first like area of interest, would be a simple structure break of that low in there. Your short opportunity would come probably off the back of this. Conservative stops would be above this high. Aggressive stops above the recent highs outside of the range end play in here. And you would have probably taken a 1R loss fighting the trend. However, would you have fought the trend on a day like we've had today? I mean, that is probably the more questionable question. I'm just simply saying if you wanted to take the mean reversion play, using the criteria that we look at here, you probably would have taken an L in doing so. Was there an opportunity to get long off of the reaction zone that we look at here? I mean, yes, you know, you would look at this as a potential test. You would look at this as your structural high, but would I want to chase it outside of the move that we've already had on the day? I would argue probably not. Was there anything that we could have taken to actually get us in alignment with this move to actually begin with, right? Bear in mind, a lot of this move started, it looks like either Asia or going into London. What time is it? Asia, right? So midway through Asia, we started this kind of pump to the upside. And the range that comes to my eye is this one here, right? This would be the range play from my eye. The question becomes, does it provide an actual valid entry? So I would argue that we had range formed in here. We would want to say, if we're looking for continuation to the upside, we want to see that 5-minute reaction to kind of give us something to get on board with this. We start tearing up. And we really start ripping here. It's a tricky one in my eyes. The expansionary moves outside of the range are always a little bit more difficult. I honestly, I don't know. I don't know if I would have had a very clean play in here, something that immediately jumps out to my eye. And again, depends how you trade this. Would there have been something in there for you? Would this been a time of day that you're even watching the markets for a move like this? Again, all questionable criterias. I'm not going to sit here and say I could have invented an opportunity. If it hasn't screamed out at me, I don't know if it's something that I would want to force. But unfortunate to not be able to have something to really take advantage of the move up. But that is the game. Sometimes you're not always going to get the entry model that you would like. But the swing play most definitely gave us something favorable to work from. We'll keep that on the cards. We'll see how that pans out over the coming days and weeks going ahead. And we will work from there. Right. Let's have a look at gold. Gold. So, and again, I think I was discussing this with Billy yesterday, right? In that if I had to force a trade, it would probably look something like this. And you can see what time did this happen? 6 p.m. after we got off stream. We would have had a trigger here to the upside, and we would have taken that 1R loss right before the market starts ripping to the upside. Do I regret it? Absolutely not. The game is the game. You're going to get valid losses in alignment with your plan. The question becomes, was there anything that could have got you long inside of this potential move up? And again, this one started, we got two ranges that catch my eye from this move up today. That would be the first. The second would probably start from here. Those would be the two areas that I'm looking at. The first one, I believe, is the one that we initially had drawn up. We would have taken the, sorry, this one in here. We would have taken the L down in here, trying to get long. After this, again, difficult market, I think. Nothing super clean that jumps out at me to really get me on board with this. I think it would have been a simple day of observation. There's just nothing clean that stood out to my eye that kind of gets us on board. And again, at least for what I look for. The overarching thing, though, that is worth discussing here, my perspective on gold, and I've been very, very clear on this, that I have been looking at this as downward momentum in the markets. And I labeled these yesterday as these are my swing price targets that I would have wanted to see. No entry to get me on board, but the market has very much disproven that idea today. So these will come off as a wrong idea, but no trade to follow up and support them. What I would be watching here is I would love to see how today's daily candle actually closes. If we don't get a clearance of this high, you could start to create the case that this was a stop run to the upside, a swing failure, and actually this could be the start of a leg down to actually target the price points that we initially had in mind. It wouldn't have been in the way that I had anticipated. I honestly thought we would see more of a grind down to the levels that I was looking at. I'll leave this one back on as swing objective. And again, this is only going to become relevant if we get a swing failure or prices closes higher and then immediately rejects back below the level tomorrow. That's potentially something that I would look at, but again, doesn't scream out at me as a potential play here. But we'll wait and see. We'll be back on stream tomorrow. We will have a look and see what the market has presented us with, and we will go from there. Excuse me. Let's have a flick over to Bitcoin. Bitcoin ending very, very nicely today. We had this potential trade. Again, exact same narrative here. We've been stuck inside of this daily range, which if I show you from a higher time frame looks like this. Once the range has been confirmed, as in once we get a failure of that range, we are looking for moves from one side of the range back up to the other. Presented us with a very nice, clean opportunity. I think we labeled this out on an intraday perspective in here, which you can see in here. Intraday longs above here. That would have been the fill that you got. And targets would have been hit today for a 1 to 4.5 R. Had you wanted to take the more conservative route off the back of this, that would have been probably in this breaks above that area in here, which you can see still would have got you on board with the move, just with a less favorable risk to reward. To my eye, that probably looks like less than a 1R, which, oopsie, which, yeah, a 0.4R. I don't know if that's something that I would be open to taking, but in my opinion, very high probability. And that's what this game already is, right? It is really just a game of finding a match and a balance between high probability and high win rate over time. Thank you for all this, bro. I will rewatch this session tonight. I appreciate that, Eric. I'm glad to know it's been of some value and you're taking something away from this. Again, guys, for anyone that is active in the chat, if there are markets that you want me to run through, If there are questions that you want to throw my way regarding psychology, performance, consistency, habits, all of that good stuff, if you want to throw those my way, please let me know in the chats. I will keep an eye on this, and I will answer anything and everything that you guys do have on in the cards for us today. We'll take these off. That is what we were kind of looking at in here. The question now becomes, and I think this is probably the more interesting one to start thinking about here, is are we going to see a rotation back from the upper end daily range down to the lower end daily range? You can see the immediate test of that range has presented a rejection. Do we actually have a short opportunity that has set up? Not yet, but we are close, right? I would argue the area that I would be looking for shorts on, again, if you're looking for a simple rotational play from one end of the range to the other, this would be the area that I'm looking for. So I would want to see a short setup that looks something like this. So I'll leave this on. And again, this could be the start of our game of ping pong here in Bitcoin, where we go from one end of the range to the other and vice versa. The conservative entry would very much be down in here. Right, so we've got intraday play in here. Was not supposed to touch that. We've got intraday play in here and then conservative swing shorts below this point in here. So again, we'll keep an eye on this. We will see if anything sets up off the back of this. We may get an entry on this at some point soon. Hopefully, maybe something on stream. And if that should happen, we will we'll map it out, see how this pans out over the space of the remainder of the stream. I've got about 45 minutes left with you guys here. We'll see what the market presents. Otherwise, we'll follow it through and pick back up on this in another session. One thing I do want to cover today, we're going to take things a little bit left field. I thought it'd be an interesting topic of discussion for the stream itself. I don't know if anybody watching actively trades or invests in stocks. If you do, let me know in the chat. There is one stock that I do most definitely have my eyes on. I don't have an entry in it yet. And again, these are more long-term plays rather than anything. But it is something that I would love to run by you guys. It is SpaceX. I don't know how many of you, like I said, actively invest long-term, short-term, whatever it is. But this is a market that definitely has my attention. I like the idea of being long SpaceX long-term, but I have been waiting basically since IPO day for a more favorable price. And a lot of the reason behind that has largely been around the hype that we had at IPO, right? I don't know how many of you guys were following the story and the narrative behind SpaceX. It was, you know, when the day it went live, I believe, the day it IPO'd, I believe Elon Musk became the world's first trillionaire. Fucking insane to even just say out loud. But I think has quickly reversed off the back of this. I was actually talking about this with a community that I do some coaching in. And we were looking at SpaceX from a long-term perspective. And I said that the one thing that I was waiting for was for sentiment to really change and shift in the market. Now, I think one of the big things that put me off getting involved in the IPO was how much hype there was around this particular stock. For anyone that was watching this on any social media platform that you would have gone on to, everyone was talking about it. Everyone was talking about, you know, this going public. People were talking about Elon Musk becoming the world's first trillionaire. There was so much that was on the cards. And with how much hype there was behind this, I did not like that from a sentiment perspective, right? I like to focus, especially with like long-term investments. I want to be buying things when people are talking about this being down in the dumps, as long as there is, you know, a good foundation behind what you're looking at. I just didn't really see that with SpaceX at the time. Everything that I was seeing and observing looked very, very positive. And that's the time where I would start getting quite questioning whether I'm on the right side of this. We know most retail traders will lose money. Therefore, I want to be doing things outside of what retail are normally doing. If everyone wants to buy, I'm not sure I'm on the right side of that market, right? I want to be getting involved when people are saying like, oh, I knew SpaceX was going to die. I knew it was going to go to zero. That's the time where I'm like, okay, I'm kind of interested in potentially wanting to get involved with this here. So on the day of the IPO, I had a coaching call and we were talking about this in real time. We watched this run up in the way that it did. And I said, you know what? This may be one of those stocks that opens up and it only goes vertical from here. And if it is, it's going to be one that I miss out on, maybe a generational entry. But I said my plan of action was I wanted to see a blow off top. I wanted to see a lot of people that were running this up on the IPO get caught on the wrong side of the market. And when they come down and get squeezed, then I will start looking for a potential entry. Now, from where we are, from rough IPO prices, we are 25% odd off, at least the opening price that we're seeing in here. Is that enough for me to want to get involved? Not really. We had earnings come out yesterday. We had a 60% surprise beat on their earnings, 14% in revenue, big positive. But the one thing that is currently weighing in on SpaceX and what is to be seen here, I'm going to flick you over to one story that I have been following, which is a lot of the people that have been holding, like this is the early investors, these are the employees, people that were able to get in pre-IPO prices. They have a certain clause which they are locked out from immediately dumping their shares on the open. And I believe this is happening, I think it's in 3, 6, and I think 12-month intervals, I believe. Could be wrong, don't quote me on it. But the first one, the reason I'm showing you guys this tweet, 900 million shares of SpaceX held by employees and early investors become eligible to trade from tomorrow. That's 43% more than the 638 million shares issued at IPO. SpaceX's free float is set to increase from 4.9 to 11.8% of outstanding shares. What will happen with what these early investors decide to do is going to be very, very interesting, right? You got people saying sure they will stupidly cash out tomorrow. Everyone wants cash now. It will be interesting. I have no idea. I don't think, we had one person ask whether there is Elon Musk. I don't believe, I think Elon Musk is tied in for at least a year from memory. But it's going to be, it means that tomorrow is going to be a very, very interesting day to see what happens with SpaceX in and of itself, right? You can see we had these incredible earnings yesterday. But we are down today 8%. Where we go from here, I think tomorrow is going to be a very, very interesting day for this stock. So I'm definitely watching this one with a lot of curiosity to see what happens. I think depending on how tomorrow goes will really give me some interesting perspective as to what happens with this long term. Like I said, I'm very much flat in SpaceX at the moment, but it is something that I want to add into my portfolio. And when that happens, I will, of course, keep you guys updated. And again, it's not financial advice or signals by any means, shape, or form. This is me just transparently sharing my journey of trading and investing in the long run. And we'll see where we go. Would be cool if they cashed. SpaceX has a lot of assets that are worth something, in my opinion. It's going to be very interesting. I think, like I said, for those of you that are genuinely have a real interest in, the markets in general, I think everyone should have a good balance between short-term and long-term investing in this game, right? Short-term trading, I think, has its place. Long-term investing, I think everyone should be focusing on. I have been building, I was late to the game, I'll be honest with you, with my long-term investing. I only started about 4 and a bit years ago. And I should have been doing this from when I was much younger, but I didn't. But I have started. I'm building up a good portfolio size, letting it run. And in all honesty, my long-term portfolio has been fairly flat for the bulk of this year. That's largely been where I've had some things that have performed really well. I've had some things that I've just got a really poor entry on and been stuck 20-30% drawdown on some of these stocks. But I don't hate them. I like them long term. Again, I've been holding them now for about six months or so. And I have no intention of cashing them out anytime soon. So it'll be interesting. I think everything will do well long term, at least from the the stuff that I'm holding. But very, very interesting market. Definitely one to keep eyes on. Again, I will give some updates with SpaceX as we go. What I will do is add a little bit of a stocks section in here, and SpaceX will get added to the list. One that we can talk about and pick up on in some of our future streams. Right, let's move on to equities. Let's see what some of these markets have done throughout the day. Now, NASDAQ, we were talking about yesterday because it's been on an absolute ripper, right? As you can see, really, really been pumping from where we planned out a potential, I think, swing long, right? Off of, you can see we labeled that in here. This was, again, I think for full transparency, a hindsight trade, one that we identified after the fact. But what a pivot zone to be able to actually get on board with. The one thing, and again, I'll take you back to the stream yesterday. Please go back, check the stream. We have been talking about this, and I don't know what's going to happen. Again, I think a lot of this is going to come down to NFP. But one thing that I was observing, and I had this written down here for this specific reason, is from a statistical perspective, NQ is above its average weekly range. And you're going to get one of two things that happens on these occasions. Either the market is going to continue to rip to the upside, or we tend to get some mean reversion. Statistically speaking, we're more likely to get mean reversion, right? It is a very small percentile of cases, or it's a lot less frequent, where the markets actually exceed their statistical daily, weekly, monthly ranges, and we continue moving up outside of that. Not impossible, but improbable, right? And I think that's the best way to focus on this. It's always a game of probabilities at the end of the day. What I would very much be interested in here is what the market does from this standpoint going forward. Like I said, we have met our average weekly range, and I would be very, very interested to see what the market does for the rest of the week. We have still 4 hours of the trading day left ahead of us before we get our daily close. But what I would very much be interested in is watching this potential range, which is going to form in here, right? If we'll pin this out as a daily range. And when we look at this and observe this from a more of an intraday perspective, if today closes anything like it's looking right now, I would love to build some kind of short position in alignment with how I trade to go back to the downside, to start fading some of this move that we've had this week to see if it presents a potential opportunity. That would be the only thing that I am looking at in NQ today. And again, a lot of that narrative and context was set from yesterday. Me putting down here that we've met our average weekly range statistically means that mean reversion is maybe a far more likely outcome with what we're looking at here. If our daily candle is going to close inside of this range, that for me is a sign of weakness. And I would personally want to be looking for some potential shorts going in to potentially close the week and complete the mean reversion that we are seeing here to close us back inside of the weekly range. But we'll see. We'll see what price has in store for us and where we potentially go in the long run. ES, very similar story here. After ripping to some fresh highs, you can see that much like we've done with NQ. Oh, excuse me. I've got a sneeze brewing and it's gone. Right, apologies. As we've been seeing with NQ, very much getting a little bit of mean reversion today, closing back, or at least for the time being, looking to press back inside its average daily range. What that means for us, where are we at in terms of average weekly range? We are very much extended. Average monthly range, again, we still have some room to the upside, but it'll be very interesting to see what this market does. Actually, a pretty nice bit of momentum here coming in to the downside. Some bears really making themselves known after getting kind of a test of this 7,800. So yeah, be very, very interesting to see what these markets do. I presume very similar case. Little, I would say actually not as strong here on the Dow. You can see we're actually still in bullish territory for the day. So Dow being the outlier of the equity markets here, and really holding some of those gains relative to NQ and ES, as you can see. Yeah, very, very interesting stuff here. What would be interesting to see is whether the Dow is actually able to hold these highs, or whether we actually end up closing the day in follow-on suit with NQ and ES in terms of the weakness. If you guys have opposing views, if you have something that you're particularly looking at, I know a lot of you guys like to trade a little bit of equities. Be very, very interesting to hear your perspective on this as to whether you have a different opinion, whether you think we're going to continue expanding on the day. We will see what it has in store for us. Last on our list for today, DAX. Very much pulling back on the day, very similar to US equities here. From what we are looking at, again, nothing that I immediately would have wanted to have done today. If we look at its average weekly range, we've even got room on DAX to go further on the upside, purely from a volatility perspective. But nothing that is specifically catching my attention for a potential like swing opportunity per se. Was there anything in here that could have framed a potential short opportunity if we look at more from an intraday perspective? In all honesty, there's nothing that immediately goes out and catches my eye. You know, even from a range perspective, there's just nothing clear that really caught my eye with this. I think you would really have to dig down onto the lower timeframes to get a perspective of short-term ranges, potentially getting some scalps in here. I think that would be beneficial for a lot of people. But yeah, nothing from a higher time frame that really caught my eye, but definitely some context being set up into tomorrow. Yeah, that's kind of where we are at for the day. I think what we said at the start of the day was very, very true. We discussed the idea. It's been a kind of a quiet day so far. Been a relatively quiet day so far. Or it's just nothing that is, I would say, rich in opportunities is probably the best way to put it. Check FinViz 1 week up scan. I have never actually used this before. FinViz. Stock screener. Interesting. I actually never used this website before. Interesting. Right. Let me know in the chat if you guys have other markets, questions, issues, challenges, hurdles, struggles, highs, lows that you are currently experiencing, want to run my way. Happy to make this, like I said, as interactive as possible. If there are other markets that you're looking at. Otherwise, I want to flick back through and actually have a look at some potential short-term opportunities. I know we mapped some out here in a few of the markets that we were looking at. Nothing here in GJ. Dollar Canadian, still finding some basing here to the downside. Still nothing that immediately catches my eye. Yeah, nothing to be done here on dollar Canadian. Dollar yen, still looking for this potential long to be playing out in here. But again, nothing that immediately screams out at me. Where are we at? Silver, gold, Bitcoin. Bitcoin was one of the other ones that we had a potential opportunity. Nothing, no fill as of yet. Actually pressing up on the highs of the day. So a potential no trade here in Bitcoin. But yeah, we see where we go from here. I think those were the only ones, Bitcoin and dollar Canadian. I was looking at potential intraday opportunities, but just nothing that really came out and caught my eye, at least as we currently stand. Aussie Canadian, I think I said we were watching these highs in here. Watch reaction at this level. This is going to be a big level for me on the daily chart to see how price reacts kind of in and around this area. It's not an exact price point. It's more so a range in price that I'm watching in here, but it'll be very interesting to see what price decides to do here. Let's have a look. Aussie, nothing clear from my eyes. Euro, pound yen. Again, not my favorite play. Yeah, I think we're very much just wait and see mode, I'm afraid. Nothing that is super exciting me about the charts at the moment. Nothing that's even close to a potential opportunity. I think the closest point that we had was probably Bitcoin, but gave us a no entry. So very much flat as we currently stand. Nothing of interest that is really jumping out at me. I would be interested to see how this hourly candle closes here. How long we've got to the 4-hour close. Yeah, very interesting. I actually really do favor the idea of some potential shorts off of this. We've already presented, you know, some weakness coming into this area, which you can see from all of these highs in here. And then the immediate test that we have of this daily range and this kind of area of supply is an immediate rejection. What I would be very, very interested to see is if this current 4-hour candle turns into a wick of a very just bearish candle to the downside. And for that to happen, we would want to start seeing some rejection in here as we currently stand. But it's It's all depends on what the market is going to do in this area. Got a run on those short-term highs in there. Area of supply does look good. Yeah, I think the only problem for me is this is definitely my line in the sand here. This would be something, again, shorter term. I think the context and the narrative is here, right? I'm going to cover this very briefly again. For those of you that may have missed it before, we have Bitcoin in a range here from a daily perspective. We've had the rotation from the low. We've fulfilled its objective up to the high. We're now seeing if we get the potential ping pong play, which is daily high reversing down to the daily low. You look at this down on a lower time frame. If I show you the 4 hour first, we have had weakness coming into this area initially. The initial test of the area supply and the daily upper end range ended with a very weak closure. Couldn't close to fresh highs, wick rejection on the top. From an hourly perspective now, I do really want to see this start to roll over. So I honestly, from an intraday perspective, it's starting to tick all the boxes. What we need now is just entry criteria, which would be to come and break down below here and then to target the low end range, which would give us, again, depending on where we get in, but somewhere circa a 3.4R trade off the back of this. Sleeping Dolphin says, check FinViz 1 week up scan. Have you seen XLF? FinViz caught every daily and weekly clean move on XLF. Interesting. Like I said, not too familiar with FinViz and their scanners, but yeah, very interesting. Very interesting. Yeah, I'm gonna have to mess around a little bit more with this website. It looks cool. A lot of information on there. Caught every daily and weekly clean move on XLF. Fair. Like I said, if you got something that's working for you, lean into that. Right, guys, I'm going to step away for just a second. I'm going to top up my water and I'll be back with you guys to see this stream through to the very end. We got about 20 odd minutes left of the stream. I'll be back with you guys in just a couple of minutes and we will see what the markets are looking like on the close of the stream. Back with you guys in just a sec. See you guys shortly. Right. Sorry about that, guys. I am back. I'm going to see you guys into the close of today's stream. We were watching out for potential shorts here on Bitcoin. It's the only market in my eyes that's actually playing out somewhat clean. Dollar Canadian making a little bit of a move here. We'll definitely be watching it up in this area to see what it wants to do. But nothing that's immediately setting up here. I want to have a look at Bitcoin. I'm going to do the ungodly. Anyone trade this thing on a 1 minute chart? I have, I don't really mess around with the 1 minute chart at all. 5 minute is kind of my, I think the lowest that I would probably want to mess around with. But in all honesty, there's just nothing that super excites me right now. It's the only potential opportunity, but I think I would only want to see it a lot lower down. Plenty of room on its average daily range. Dollar Canadian making a little bit of a move here. Again, very nice rejection from the lower end weekly range that we've had mapped up. We're getting moves across the board. Aussie Canadian making its move back up. It could print for a very interesting daily close here. I would love to see the kind of rejection as we are seeing here. And then maybe expansion to continue on to the upside to that higher time frame objective that we've been looking at. I can see all the higher time frames on the 1 minute chart on Bitcoin, so I trade it on Coinbase at times. Fair enough. The volatility on the likes of something like Bitcoin on a 1 minute chart must be insane when it moves. It's been, we've lost a lot of volume in crypto overall, right? You look at how some of these moves were generally playing out over time, but you're starting to see a pattern. And again, this is a daily chart, somewhat zoomed out, right? You're starting to see very much a pattern between these kind of expansive moves and then these range bound environments. And then you get the expansive move and then the range bound environment. Then you get the expansion and then you get the range bound environment. The question is going to be, are we going to follow this pattern, right? I shared with you guys yesterday, my long-term objective on Bitcoin sits very much down in here, right? I'm keeping that thrown up. Swing targets of 40 to 45K on Bitcoin. And I would love to see a swing opportunity to get us short and in alignment with that. I just don't really see anything until we start breaking down through this low. That's really what I would start looking for. But as we currently stand, just a lot of chop, right? Just kind of like what we were seeing in here. It's just a game of timing before we have its next expansionary move. And we see where we go. But yeah, Bitcoin's starting to come off here. Potential move, I think, to be taken for the intraday shorts. If we get down the break below here, that's the entry model that I would prefer. I know some of you guys are going to be super aggressive, wanting to be short the double top here. Not really my style, but again, depends on what your entry model is. We see where we go. Let's have a look at dollar Canadian making his move up. Let's keep an eye on this one. Whether we get anything to actually pull the trigger on before we cut off stream today, we will see. Let's have a look at how everything else is moving. Cable coming off here. Dollar Canadian, we know. Dollar yen. Really using this as a little bit of a platform and a base. I would even argue that this wasn't even the cleanest monthly range. You can see from here we have it drawn out, here we have it drawn out. But you look at the reactions to this, actually super clean. Shows the the importance of, or how useful these kind of ranges can be when you're looking for reactions in the market. Whether it pans out to a profitable trade or not, but definitely getting a reaction by all means. Let's have a look at NQ. Pulling back up into this daily range. Yeah, going to be very, very interesting close here. Any close for me below that high is a sign of weakness. Now, when you've got sign of weakness in conjunction with the fact that we've exceeded or met its average weekly range, I really favor the idea of mean reversion. Maybe filling in some of this this gap. A lot of you and ICT traders, I know, will be going nuts at the idea of a potential fair value gap. But yeah, it'd be very, very interesting to see what he does here. YM still up. DAX pulling back still. Silver, I mean, you're looking at this again. I don't know how the daily candle is going to close yet, but if we close anything like we are looking now, I feel like this could be the start of a real move to the upside. Considering the rotations that we've got here on the monthly perspective, I actually like the looks of being long silver far more than gold, right? You look at the reactions to the downside here on gold relative to silver. To me, it just looks so much cleaner on my eye. You've come down, we've created the base, swept the lows, coming up, and now finally starting to take off after a bit of a sloppy period of consolidation. But definitely something to keep your eyes on here. I do think this area as a potential swing target is definitely one to watch out for. Sorry, I stepped away to answer your question too soon for SpaceX. I agree with you, but we should look at related stocks to SpaceX like WCC or Lithium or Mega Blockchain or super chip companies. Fair. Those aren't ones that I have a real AI play on at the moment. It's a very long-term perspective, and it's all based on the narrative of supporting the infrastructure of AI, right? My thesis with AI is that there's obviously going to be a lot of companies and competition that are trying to win the AI race, right? Cheapest prices, best technology, most advancements. But I think the theme that made more sense to me is there are certain things that are required in order to support the continuing boom in AI, whether it's data centers, whether it's chips themselves, whether it's energy companies that have to support the electricity, whether it's commodities that have to go into the actual wiring of these data centers themselves. I think there's definitely a long-term play to be had, or at least I'm speculatively betting on that idea that I think if the AI hype is going to continue, which I think it will, I don't think it's going to disappear. I think all of those things have to do well as a prerequisite. I kind of see this as like a, you think of like the gold rush and the people, you get that old sort of narrative. The people that really made a lot of money is the people selling the shovels, right? It's the infrastructure that is needed to get the gold. I see this the exact same way with the AI kind of infrastructure play. All of those things are needed in order for the the infrastructure to be there to support the idea of AI actually existing. So yeah, I don't know. It'll be interesting. It'll be interesting to see how it plays out. If I can get a good low on Bitcoin, I can trade off that same low all day, changing size versus the dips. So the wild Bitcoin volatility on the 1 minute can help. Fair. I mean, whatever works for you. Whatever works for you. If this could have just happened like an hour earlier into the stream, we probably could have pulled the trigger on something actually on the charts themselves. But it looks like this is going to go into the close. And in all honesty, I would probably want to reassess on the daily close to see how things are looking. But this to me, like the daily close closes anything like this on dollar CAD, for example, I'm favoring further downside. I think the bounce that we got here, yes, it very much ticked the boxes for me, but I don't know if we're going to get the full rotation to the weekly high. I could be wrong. It just hasn't played out in the way that I would have really liked to have seen it. And there's nothing wrong with that. The market's going to do what the market's going to do. Can't control how it sets up. Can only control being prepared for the opportunities that lie ahead. Yeah, unfortunately, it's just one of those very quiet days across the board. Even on the hypothetical entries, there's just not a lot going on that we would have done earlier in the day, as well as into the closes of the day themselves. Dollar yen here. That to me is looking relatively bullish. I do like the looks of this a lot. Coming in, initially losing that monthly low, reclaiming it, now retesting from the underside. I do think it would make for an interesting move to the upside here. Again, keep in mind what I said about Bank of Japan. I think that's definitely going to weigh in on what we are looking at here. You can only control risk. Sleeping Dolphin, I 100% agree with you. I actually spoke about this last night on a coaching call that I had. And I spoke about the idea that, you know, as traders, I think one of the best mindsets to have is simply putting yourself with, or looking at the market from a lens of like, we're not predictors of the market. We're just good risk managers. That's it. Right? We're not predictors of the market. We are simply just good risk managers. And that may sound very similar to some people. Maybe some people use those terms interchangeably. The way that I personally see it is a lot of people come into trading with this philosophy that I need to predict what is going to happen next. And when you are focused on prediction, every time that you are proven wrong, it feels like you've done something wrong, right? It sets you up on this spiral of like looking for the next piece of information. Whereas the flip side to this is when you focus on being a good risk manager, you only really focus on one thing. I want small losses and large wins. Small losses and large wins. When that is your field of view from how you approach this game, you stop being so opposed to the idea of losing and you just focus on keeping those losses as small as humanly possible and maximizing the upside when it appears. So it actually creates like this comfortability with not losing, with losing itself. And that creates a very different mindset going forward. So yeah, I completely agree. Risk is one of the only things we can really control in this game. I unfortunately don't think we are going to get anything that sets us up here. I think we're going to get a little bit of a quiet session to close out the day. I think dollar Canadian and Bitcoin were the only things that I potentially had my eyes on, but I don't know if we're going to get a trigger here before the close of the day. Right, we have couple of minutes left before we wind down the stream for the day. I just want to give a quick shout out to everybody that stuck with the stream right the way through to the very end. I'm hoping there was some nuggets, some laughs, some wisdom maybe in there to take away, whether it was about the markets, whether it was about shaving your head and going bold, whatever was the case. I hope there was an enjoyable stream here for you guys today. I'm hoping you found some value. I know we had some new people on board today, taking over the afternoon sessions for you guys. And I think some incredible value shared along the way for sure. But that is us wrapping up for the day. Thank you guys so much for tuning in today. I'm very much looking forward to presenting for you guys again tomorrow. Hopefully we get a little bit more excitement, but again, very mindful of NFP week. We don't know what we're going to have in store for us and how things are going to play out. As we've said, can't control anything else in the market except your risk. And that's all we are going to keep our focus on in the long run. Guys and girls, have a very disciplined rest of the trading day for those of you that are still in the markets as we stand. For everybody else, I will see you guys same time tomorrow, and hopefully we have some better action in store to unpack. Thank you guys so much. I will speak to you then. Take care, my friends.